with that professionalism. Guys, every morning, because, hey, thanks, Jen. Not a dirty hippie anymore. Um, I feel like me again. This is, Jen, I've had short hair for my entire life for the most part. And I grew it out, and I'm so glad to be done with it. Every morning, guys, I come in and I check news. Today's Monday, July 1st, and at 9:45 a.m., guys, there's some medium impact news going on. There's one of those orange boxes, and that orange box lets me know that there may be people waiting in the wings to react to whatever that news is. And right below it at 10 a.m., there's high impact. And guys, this is about a 15-minute window where the market may go crazy. It might get a little wonky. So I don't trade the news. I don't worry about what they say. I don't have this, dear diary, today the ISM manufacturing PMI said. But what I do know is that there's people that make decisions based on news releases. And as long as I have the advantage of knowing when they may react, I can choose to stay out of the market. So every morning, this is the first thing I do as I come and I check news. Everything that I talk about is going to come from the Nexgen page, guys. And more specifically, the training guide page. This is where all the answers are. I don't keep any secrets from you guys. My goal every day is to give you everything that you need to be successful. And I mean everything that you need to be successful. And it all starts with the high probability trend trade. This is what we talk about for the first hour. If you're newer with me, you're probably like, man, why is he saying the same darn thing every day? Because when you say the same thing every day, you begin to understand, you begin to recognize. It's that repetition, guys. Repetition creates recognition. So the first repetition, the first recognition is the high probability trend trade. Because this is a trade, this is a pattern that has been proven through historical study, that has been proven through live trading, that has been proven not on one or two instances, but rather thousands of instances to give you the potential to win 70 to 80% of the time. The market has a memory, guys, and we've tapped into the memory and we've identified this pattern, and this is a pattern, the high probability trend trade, where each indicator on every chart is going to agree for the rules for the trade. You're going to have the strongest triggers giving you the advantage of momentum, and you're going to have no termination conditions, meaning that there's nothing in your way, and there's no trouble spots between your entries and your targets. Good morning, Zorro. So this high probability trend trade, delete, Gary, delete, or you can just go and grab a new one right here. This is the one that's not mine. You click on the link here, you can get it as well. Killed my flow. We're going to talk about this trade, guys. This trade that gives you the potential to win more than it doesn't. It's just a pattern, is all it is. It's just a pattern. And it revolves around a couple advantages and putting those advantages together to get you into a trade. The high probability trend trade, it happens 3 to 5 times a day most days, guys. It's not a trade that's always happening, but it is a trade that creates a lot of confidence through the memory of success. And what I've found, and I think that you would find as well, is that while it's not a glamorous lifestyle, right? While it's not oh, this is so exciting, I'm catching every move of the market kind of trading plan, what it is it's a trading plan, and it's a trade that allows you to win more than you lose, which means that you're a successful day trader, and that's really the goal. But what the high probability trend trade really does for you guys is it teaches you to read your charts, and chart reading is about 90% of your day every day. Chart reading is identifying those advantages, recognizing the pattern, and entering the market because the rules are true. Because the rules have been proven to provide you a statistical advantage. So that's what we're going to do, guys. We're going to talk about having a statistical advantage every time you enter the market. It'll be on you, not on me, but on you to determine if the rules are met. It's going to be on you to understand if you had that advantage, and then you have to hold yourself accountable for whether or not you followed your rules or whether you broke them. And that's okay, because I'm going to give you feedback to help you get to where you want to be. Chart reading, guys, you're going to understand where the market is likely to continue You're going to understand where the market is likely to stop, and you're going to understand where the market is likely to go. And these three concepts can never be taken away from you. And this is what the high probability trend trade teaches you. So we're going to go and we're going to start talking, guys. And I'm just going to pull up our little PowerPoint here. And just a heads up, I'm going to give you this PowerPoint before the day is over. So every picture that I share with you, every teaching tool that I use, you guys will have access to. So we're going to get going. How do you get to where you want to be? That's what everyone wants, guys. Everybody wants to be a trader. Everybody wants to be a trader. I want you to change your verbiage. I want to be a chart reader. I want to be able to read my indicators. I want to be able to recognize advantages. I want to understand a simple pattern that allows me to win more than I lose. And the easiest way to do that, it begins with posting your trades in class. Just post them in class. So if you take a trade, drop it in. Let's talk about it. And here's the deal. I'm gonna say it because we did it this morning. You're gonna get your feelings hurt. You're gonna make $500, and I'm gonna tell you, hey, you traded directly into a termination condition. And while I'm celebrating your victory, what you're doing is you're trading something that removes an advantage from you, and I need you to be okay and aware of that. And that's all it is. Never me telling you to trade, never me telling you not to trade, but I revolve everything that I do to the advantages. So post in the room and let's talk about it. If there's a better entry, I'll talk about a better entry. If there's a better exit, I'll talk about a better exit. If there's an advantage missing, we'll talk about it. If there's a misunderstanding of an advantage, we'll talk about it. So post in the room, but what's really important is you have to tell me what you see. If you're just saying, hey Mark, I took a trade, then I'm going to high five you and cool, take your trade. But if you say, hey Mark, these are the advantages that I saw, this is why I did what I did, I'm creating a set of rules that allows me to catch this trade, and I'm writing on the chart my rules. Strong triggers, clear path, why I entered where I entered, so that it becomes repeatable, so that I can do the same thing every time, and I can go through and I can find 100 instances that look just like this. And if I'm winning 70 to 80 of them, well then I know that every time these rules are met, I want to take these rules. If you don't write your rules on the chart, if you don't know why you did what you did, how are you going to repeat it, right? Luck doesn't always work the way you want it to. So we're going to learn the trigger line and Fibonacci rules for when it's okay to trade for the high probability trend trade. You guys simulate, practice. Simulator's where it's at, guys. You can do no wrong on simulator. You can make every mistake. But if you go through and you annotate and you talk about it, and guys, sometimes I make mistakes on purpose on simulator for the sake of lessons, to grab pictures, to make sure that there's exits in the wrong spot for teaching materials. There is no fear of loss on simulator. But when you're practicing your plan, you want to practice your rules. You want to practice following rules, because what happens is you're going to get lucky. We all get lucky every now and then, even people that try to follow the rules daily. And you're going to take a trade with zero advantages and you're going to make $300, $400 on it. And you're going to say, man, look at the money I made. I should do this every time. And what happens is it's awesome in the moment, but it creates this long-term failure, because trading into lines works less than it I just said that so wrong. It's going to fail more often than it doesn't, right? Trading without momentum is probably not going to push in the direction of the trend as often as when you do have momentum, and so on and so forth. So we're going to simplify today, and we're going to talk about that high probability trend trade. I'm going to give you a plan designed to optimize your chances of success with it. I'm also going to give you what's called a 50-50 trade, which is a medium probability trade. The high probability trend trade has the potential to win 70 to 80% of the time. Anything you take outside of that high probability trend trade, you can't talk yourself into believing that it's going to win 70 to 80% of the time, which means that you're likely to lose that trade more than you will the high probability trend trade, which is why when you begin to deviate from these trades with the highest chance of success, it's imperative that you have a plan to take them, that you have the best conditions to take them, that your rules focus on really embracing advantages to give you the best chance. The second half of becoming a confident trader ASAP, I need my laser pointer, is using the spreadsheet, guys. I dropped mine in the room just a second ago at Gary's request. The spreadsheet is nothing more than a trade journal, to be honest with you. The first page is the copy of your tracking, guys. Every time you take a trade, drop it in here. Talk about what you saw. Talk about your advantages. Talk about why you did what you did. And then take the feedback from class. Hey, Mark said that if I waited for the area inside of favorable large triggers, my risk would have been reduced. Hey, the feedback was that I didn't have the strongest triggers, and maybe that's why it pushed back a little further. I gave up my advantage of momentum. And what happens is if you come back and you study these notes every morning, guys, you're going to set yourself up for the day. You're going to begin to recognize patterns that are bringing you success, that are removing that success. And really, that's kind of where I excel, is if you post in the room, you give me 10 pictures and tell me what you're doing. By that 10th picture, I'm going to understand the things, the rules that you like to break. I'm going to understand your style of trading. I'm going to understand where you're aggressive, where you're fearful, because I'm pretty good at recognizing patterns. The second tab is the rules for the high probability trend trade in green, creating recognition through repetition. I can't make you fill this out, but I've never had anybody go through the exercise of filling up this spreadsheet and not become a better chart reader. You'll put your favorite looks in here when you have a pattern that has been proven to win more than it loses. For example, the high probability trend trade. Take pictures, drop them in here, commit them to memory so that you always find them when they happen. And then finally, the client trades is where I've done a lot of work for you guys. There's a little over 350 pictures of high probability trend trades, of the medium probability trade that I'm going to introduce you to, the 50-50 trade. There are entry sequences for longs and shorts, management, patterns that repeat themselves. For you guys that think you want to be NASDAQ traders, there's a whole section. I've blown out a lot of accounts to create this section for you. And then a whole section dedicated to termination conditions, because rule number 2 is the most broken rule out there. So use the spreadsheet, guys. Fill it out. Start your trade journal, because you have to know what looks you're going to commit to, and you've got to learn those looks so they become easy. When I first started with the software, my brother used to say, well, it's obvious. It's obvious. Guys, when you're brand new, nothing is obvious, which is why you have to take a picture of it 100 times so that it becomes obvious, so you never miss out on these advantages. So we're going to keep it pretty focused, pretty simple. You guys are going to fill out spreadsheets. You're going to tell me everything that you saw, why you did what you did. And we're going to focus on this highest probability trend trade. It's only 3 rules, which surprises a lot of new people. It's only 3 rules. Each rule provides an advantage. And guys, to be honest with you, it's the first 2 that I find to be the most important. Large chart must have strong trigger lines. That's going to provide you the advantage of momentum. Momentum is hard to stop. The large chart must have no termination conditions. And these are areas that may stop the market. Do you know what stops momentum? Termination conditions. So you're going to make sure that there's none in the way so that you have room to your profit targets, and that'll give you the advantage of a clear path. And then initially, we're going to take the next hour to focus on the entry, the highest probability trend trade entry. You're going to learn how to get into the market where the market is most likely to continue, and this is going to allow you to reduce risk and maximize profit potential. But I can tell you that momentum and a clear path is enough to develop a pretty outstanding trading plan, and your entry areas will grow as you grow. So we're going to find these 3 rules on only 2 charts. And more importantly, your first 2 rules are going to be met on the most current bar of the large chart, the slow chart. This is a broad stroke of a brush, and all it does is it shows the overall opinion of the market. The large chart tells you what the people in charge want to have happen. You will define the direction of the market through the large chart. You'll define the momentum, that first advantage from rule number 1 on the large chart, and you'll also define whether or not you have a clear path by recognizing the areas on the large chart, guys. 66.66666 of your advantages come from the most current bar, 1 bar on the large chart. When those rules are in place, the small chart is an entry chart. The small chart is a refinement chart. Within 1 bar on the large chart, there's typically 20 to 30 bars broken down on the small chart. You'll see the movement from the top of the bar to the bottom of the bar, but you'll see it in about 30 bars. So we're going to use this refinement chart And you're going to be able to pinpoint exactly where the market is most likely to continue. The best of the best area for entry. It's going to allow you to reduce your risk and increase your profit potential. And that's where the entry for the high probability trend trade comes from, is that smaller, faster chart. And we do that because the large chart is a reflection of the people that move the market, the large crowd, guys. The small chart is a reflection of the smaller chart. The people that think it's fun to fight the large chart, we're going to take advantage of their misfortune because they'll create little pushes against the big crowd. But the reality is they lose their push, or they end their push. 70-80% of the time, the market ends up going up with the big crowd, which is why with the high probability trend trade, when we pinpoint where their good time ends, it allows us to have a trade capable of winning 70-80% of the time when you follow the rules. So everything starts with momentum on the large chart, guys. It's a pretty simple look, not hard to recognize. When the background's green and the market's going up, both the small triggers and the large triggers must be green. When the background is red going down, both the small triggers and the large triggers must be red. If your trigger lines don't agree with the background, if they don't agree with one another, you don't have strong triggers. How easy is that? Strong triggers means that your smalls are up and above the large triggers. The large triggers are widening. Flat triggers do not provide momentum. And there's space between the two. The space between the two tells me that the odds are favorable for the market to continue up. And the same thing in a downtrend. When the smalls are below and they're wide and the space is there, then that lets me know that there's strong triggers. And strong triggers means that the odds are favorable for the market to continue in the direction of the trend. So you're going to hear in this classroom all the time, odds favorable momentum. You're going to see on people's charts it annotated, OFM. And when I have odds favorable momentum up, I'm going to use a refinement chart to buy Fibonacci support. On the large chart, it looks like this tail. We don't trade tails, guys. We're way more precise than that. We're going to use the small chart to pinpoint exactly where this tail is most likely to form. In a downtrend, we're going to use a small chart with odds favorable momentum to determine exactly where this tail is most likely to form. So strong triggers up, strong triggers down. Is everybody good with that? It's really a pretty simple recipe. Where's a large chart? S&P is having a case of the Mondays, right? But check it out. There's strong triggers up, smalls above the large. Everything is wide, and look, strong triggers has the ability to break areas, guys. Strong triggers pushes that market. The same is true with strong triggers down. So if you scroll back and you just start taking pictures, create that recognition process. This is what it looks like to have strong triggers to the downside. I'm going to learn how to sell Fibonacci resistance when I have this look. This is what strong triggers to the upside means. I'm going to buy Fibonacci support when I have this look. And really, just let it be that simple. Here the large triggers are up, but the small triggers are down on my most current bar. I can't have strong triggers. It's impossible. The colors don't match. And this is where I have to say, and this is the hardest thing you'll ever do, I have to say to myself, I don't have the advantage of momentum, therefore I don't have a high probability trend trade. I'm going to have to sit on my hands for a minute. And guys, strong triggers become weak triggers. They always do. When the smalls return to the large, when the smalls work their way inside, we call this a weakening of the large triggers. Weak large triggers let me know that anything can happen up or down. So strong means that the odds are favorable to continue, and weak means that anything could happen. And guys, anything can happen means it could go up, it could continue down, right? It could become this fight in the middle of nowhere. And these anything can happen triggers, it's not uncommon to see them precede reversals. So let's see if we can find an example. They return, and there's your reversal. The market's been going a little kooky here. There's those weak triggers, giant pushback right to Fibonacci support. There's those weak triggers, precedes the reversal. A lot of these times the areas are stopping them. Weakened triggers, there's a large pushback. Strong triggers, sell resistance, ride that wave down. So guys, over and over, The recognition comes not from taking a trade and hoping for the best, but rather going back and studying. Let me find these looks, let me commit them to memory, let me make sure that I never miss when I have advantages, and let me make sure that I talk to myself and say, hey, that advantage of momentum is gone. Is everybody good with that? Strong triggers, best of the best, self-Fibonacci resistance. As the small triggers work their way back in, it denotes weakness. And guys, when you have weakness at fibs, these are where fibs like to hold. And that's rule number 2. Termination conditions false, guys. Not trading into areas that may stop the market. I'm going to tell you right now, areas break all day long. Areas break all the time. Areas break with momentum a lot. But if you went back to 100 times that the market hits a fib, 100 times that the market hit the fib, what you would realize is that over 51, at least 51 times, that fib creates an untradeable bounce. At least 51 times, that fib stops the market, reverses the market, which means that when you reach a termination condition, guys, you don't have a clear path and the advantage is gone. And it's hard to be okay sometimes with not taking the trade because your gut's going to tell you, oh, I think it's a trade. But termination conditions false as a rule because when they're present, it removes your advantage. And we're talking about advantages. So what is a termination condition? It's a line on the large chart, guys. A termination condition is a Fibonacci-based indicator that may reverse the market. And we're going to use a comparison of the trigger lines in those areas, guys. And you're going to be able to recognize, let me pull up the picture here. I'll give it to you guys in the room. These lines on a large chart are where the large crowd is making decisions, guys. These lines on the large chart are where buyers are buying and sellers are selling. These lines on the large chart are where fights happen between the people that are in charge. And you're going to use your trigger lines, and you're going to know whether or not they're likely to stop the market, which means they're a termination condition, which means your advantage is gone, or whether or not they have the potential to break, which is going to put you in a 50-50 scenario, which really means that it could or it couldn't. And you're going to understand when they're broken, when that path is clear, when those advantages are present, it's time to look for trades. And everything starts on the large chart with price reaching that area. Price has to reach the area to set off the decision-making process. So there's 3 scenarios, guys. If price reaches an area, you have to ask yourself, where are my triggers? It's that simple. Where are my triggers? If they are all above support, if they are all below resistance, well, then you've reached a termination condition. And guys, every line on your large chart will be a termination condition, at least for a moment. And then we have to wait for the reaction. And I have to say to myself, and it's hard because I'm an egomaniac, guys. I have to say to myself that I don't know what the reaction's going to be. Nobody called me this morning and said, hey, Mark, when we get to 18,908, all the sellers are going to jump ship and the buyers are going to take over. Or hey, Mark, when we reach this Fibonacci support, we're all taking profits and leaving the market. Guys, nobody does that. But what I do know is that if price reaches, that decision could ruin my fund. So if the triggers are above, I'm not taking any short trades because it is a termination condition and I don't have a clear path. And it really is that simple. And the clear path doesn't come to me until both the small and the large triggers get to the other side of the problem area. So for brand new users, price reaches an area, the triggers remain above support, below resistance. Sit on your hands and do nothing for a second. Let's wait for the reaction rather than trying to predict the reaction. When the smalls and the large get to the other side, man, that path is clear. Let's look for rules to be met for high probability trim trades. Let's focus on keeping it simple initially. And then eventually you'll get to the point where with all that momentum in the triggers, when the small triggers smash through but the large triggers haven't made it yet, these areas have the potential to break, but they're not broken. Not yet. The path isn't clear yet, not until both triggers get through, but I'm going to give you a plan to be able to capitalize, to be able to take advantage of this. And I'm going to see if I can pull up my large chart again real quick, because I want you guys to see this. Even with odds favorable momentum, price reached resistance to the tick. Scroll back, guys. Learn to develop some trust. To the tick, and that created the push down. Price reached resistance. All the triggers stayed below. That creates the push. Do you see it? Support to the tick. Divergence high. Pushes it down. Guys, this is rule number 2. And there's a lot of you guys that love to say, but Mark, I made $500. But Mark, I made $300. But Mark, I had odds favorable momentum. Why wouldn't I trade into this area? Because more often than not, this is your reaction, guys. Here it only had the potential to break and it didn't. Here it had the potential to break and it didn't. Here it had the potential to break and it didn't. Everything that we do revolves around statistical advantages, guys. So what you can do is you can say, that's my look. That's the one that gives me the highest chance of success. That's the one that's going to create confidence. That's the one that I'm willing to risk my money on. And I made this stupid picture today because sometimes I make stupid pictures. Everybody knows the 3 little pigs, right? Your clear path is the straw house, guys. The wolf knew where to go. Your 50-50 trade potential to break is made of sticks. You're going to have to work harder to find success. And guys, every now and then those bricks are going to tumble, but it's rare. It makes more sense to focus your attention where the advantages are higher. So is everybody good with that? I mean, we just went back and saw how many times where termination conditions stop the market cold. Isn't it amazing that you know exactly where this has the potential to happen? You know exactly where the large crowd's going to be making decisions, guys. And you can choose not to trade into it. That's all it is. It's a choice. I'm making a choice to not trade into an area that has the potential to stop the market because I know that it can ruin my good time. So can you guys give me a Y in the room if you're with me on termination conditions? Especially if you're new. I'm looking, I don't see a lot of new names today. So if you are new, get vocal on me here. Talk to me about it. The most broken rule, guys. The market's going down. Mark, I didn't find an entry. Areas break. Mark, I didn't find an entry. Price reaches yellow 1-to-1s. You know, to hell with it, Mark. I'm going to go short into it because the market owes me money because my rules weren't met yet. And then you lose and you feel defeated and you feel angry and you feel, oh, I can't believe the market did that to me. The market doesn't do anything. The market doesn't know that you exist. The market just repeats patterns every day. So the market wishes that you'd learn the patterns so you don't have to give your money away. I'm going to show you this picture. I love this picture because this is 90% of the time, guys. 90% of the time. Maybe I'm trading into a termination condition. Maybe it bounces right into another termination condition. Maybe my trigger colors don't match. And I go through this for about 45 minutes, guys. About 45 minutes where I can't find rules met. And that little devil on my shoulder starts telling me, Mark, just take a trade. Maybe it'll go. Hey, Mark, just take a trade. Maybe that area will break. That area didn't break 7 times. Why do I feel like it's going to break magically on the 8th, right? Guys, this is where people lose accounts, right? This is where people lose $1,000 forming opinions. This is where people give away $500 hoping and wishing and wanting. But the reality is, if you learn to cool your jets, to sit on your hands when the advantages aren't present, eventually, in the wise words of Muser, I'm forever going to give you credit for this. When I don't try to fabricate trades, the right trades always seem to show up. The momentum just seems to show up, and the clear path just happens to show up. And the perfect entry, lo and behold, gets me. And then just all I have to do is ride that wave of momentum right up to trouble. And guys, it costs nothing to be in the market when there's nothing to do. There's no obligation to enter. There's no time frame. Well, I haven't taken a trade in 30 minutes, so I have to take a trade. Your brain's going to believe that, right? But if you can make $500 a day, and you only have to work really 7 or 8 minutes worth of button clicking, that's a pretty good day. The people that work the least are typically the people that are most successful because they're insisting on advantages. Is everybody good with termination conditions? You're going to want to study it a little bit, right? But if price reaches an area, the triggers remain above support, below resistance, it's cool to sit on your hands and do nothing. Sometimes the market doesn't make it to Fibonacci support, and sometimes it'll be absolutely screaming and doesn't make it to Fibonacci resistance. So there will be one time, only one time, where I'm going to recognize a termination condition on a small chart, where I'm going to let a small chart, an entry chart, a refinement chart, tell me, hey Mark, don't take that next trade. And that's when three divergences print in the same price range, guys. These cyan lines, light blue lines from a low, or magenta lines from a high. When price comes down and forms a pivot, right around the third bar, if you see my laser printer, right around the third bar, if the software calculates, hey, whoa, Mark, momentum isn't following price, let me put a big fat visible blue line for you, letting you know that momentum is dragging. If it happens 3 times in the same price range, guys, no more short trades. You don't have a clear path. This is the faster chart, a smaller chart, showing you the change that you can't see on the large chart. The same is true at a high. These become more powerful with that rule number 1, anything can happen triggers. It becomes more powerful still if it creates a little head and shoulders pattern, third pivot's higher than the previous or lower than the previous. And you'll be able to use this look on a smaller, faster chart, guys, when the large chart can't tell you that it's not going to finish the move. So everything is down, the path is clear, you're excited, everything is up, odds favorable, you're like, I can't wait to take a long trade. And then 3 divergences says, hey, wait a minute, sit it out for a second, there might be a bigger push. Let's not get caught up. And guys, that's the only small chart termination condition that I respect. Lines on the large chart can be problematic. Lines on the large chart are where decisions are made. Lines on the small chart, guys, we're going to use those for entry. And it's going to allow you to pinpoint. You're going to be so stinking precise, it's going to amaze you. You're going to call your wife and go, you should have seen this entry. It was out freaking standing. Rule number 3 is on the small chart. Rule number 3 relies on the small crowd to create a push. Rule number 3 is so precise in locating your entry, the best of the best spot where the market is likely to continue, that you're going to be able to activate a limit order and wait for the market to come to you, guys. And you're going to use a limit order to buy or sell a pullback. Do you guys remember that little fight that the small crowd creates? That little pushback that the people that probably aren't going to win do? We're going to take advantage of that. That's a pullback. That's a retracement. So we're going to use a limit order to buy or sell that retracement, and we're going to let it happen at areas, fibs, mid-bands, and yellow 1-to-1s. Remember, we're only doing this when we have momentum and a clear path. So fibs, mid-bands, yellow 1-to-1s that are inside of triggers, guys, inside of that moving average. And we do that because what we're doing is we're compounding advantages to create an entry point. Both charts have large triggers. The large chart has large triggers. The small chart has large triggers. These large triggers are where I expect price to pull back to. But they're wide. There's momentum. So it's a pretty good range. On the small chart, I expect it to pull back to those large triggers. I don't expect the large triggers to stop them, but I expect price to correct to those large triggers. So the large chart large triggers are what I'm going to call a correction point, where I expect price to come back to. The small chart large triggers are a correction point, where I expect price to come back to. So I am going to insist that those 2 correction points are one on top of the other, creating one correction point. Does that make sense, everybody? This is what we call favorable large triggers, when your large and your synthetic are overlapping, like 2 snakes riding piggyback. Guys, what this does is this takes the correction point from both of your charts and puts it in just one spot. And then when I put areas inside of that correction point, I give the market something to bounce off of. So the further apart those large and synthetic are, guys, the more indecision there is on your trades, the more possibility for bigger risk, the less you're able to really pinpoint where the market's likely to continue. So we don't trade tails. We don't trade that tail on a large chart. This tail, at the very top of this bar, when I have odds favorable momentum, at the very top of this bar, when my path is finally clear, that's this. That's the top of the pullback. The bottom of the pullback, bouncing off of areas inside of favorable large triggers, that's your tail, guys. You're going to use this refinement chart, and you're going to pinpoint exactly where the market is most likely to continue. And the process is the same whether it's a long or a short, guys. And it begins with rules met on the large chart. I can't stress that enough. If the rules aren't met on the large chart and you start hunting entries on the small chart, you're probably going to lose more than you win. So when the large chart says odds favorable momentum to the upside, when the large chart has no areas creating a problem to the upside, we're going to let the small crowd fight. And guys, you're going to sit on your hands and wait. And you're going to start getting nervous, and your palms are going to get sweaty, and you're going to feel like you're missing out. But remember that we're trading a pattern that repeats itself every day. We're trading a pattern that repeats itself on every market. I don't care if you're looking at crude oil, S&P, Tesla stock, Apple. I don't care if it's crypto. Guys, this happens on every market because there's always a fight. The reversal bar signals the beginning of the fight. The reversal bar is not your entry. The reversal bar is not the entry for the high probability trend trade. It signals the beginning of the pullback. If you're entering trades on a reversal bar on the wrong side of these small triggers, it's more likely to push way down and turn into a trend trade. So the reversal bar says, hey Mark, let's find those favorable large triggers, large and synthetic. Are they one on top of the other? Are they wide? Are they angled in the direction of the trend? If they are, well then I don't have a huge area to look for areas. Fibs, mid-bands, yellow 1-to-1s. Because it's the areas that I expect to create the bounce. It's the areas that give the market something to ricochet off of. So reversal bar signals the beginning of the pullback. I find my large triggers and my synthetics. I put a box around them, a circle around them, I highlight them, and then I create what I call my window of opportunity. And this is going to be where the market is most likely to continue. This is the entry for the high probability trend trade. From the highest point of support to the lowest point of support inside of favorable large triggers, I'm going to activate a limit order closest to price, right at that highest point. Because the large chart is a freight train of momentum to the upside. Because the large chart has absolutely nothing in the way to create a bounce, I don't expect the small crowd to get a lot done. I'm going to activate a limit order right at the top of the window. And if the small crowd has it in them to get to my limit order, guys, I'm going to be in a long trade. It may push to the lower point inside of favorable large triggers. That's okay. I'm still in the win zone. But areas on the other side of the correction point, areas beyond those large triggers, beyond those synthetic triggers, these are not a part of the equation, guys. You've already lost your advantages. This is where stops are going to be placed initially, and I'll show you a picture for that. So, reversal bar signals the beginning of the pullback, not my entry. I'm going to find my trigger lines. When price reaches the trigger lines, not my entry. I'm going to identify areas inside of favorable large triggers. In this case, guys, it's one area, which is nice. That's a pretty small window. My job as a high probability trend trader is to activate a limit order just below the lowest point of resistance inside of favorable large triggers. And if the small crowd can get there, this becomes the entry for the highest probability trend trade. I've got 3 fibs in yellow 1-to-1s, and every one of them is beyond my correction point, beyond those triggers, which means that these are not in the window. These are not a part of the equation. If price goes railing up to these, guys, I don't want to be in this trade anymore because everything's going south. And that's what finding great entries does for you, guys. When you can pinpoint where the market is most likely to continue, you understand where the market shouldn't go. It shouldn't go beyond those areas inside of favorable large triggers. It shouldn't go beyond those large triggers, that correction point. So your first initial stop is going to go 4 to 5 ticks beyond the trigger lines. A lot of new users are fearful of putting $100, $120, $150 on a trade. And it's not uncommon to see somebody try to enter at resistance and put a stop just below resistance inside of favorable large triggers. This is almost a surefire way to get stopped out and then just watch the market go without you. So your initial stop will go 4 to 5 ticks beyond those trigger lines. With all of that momentum, with that clear path, with that perfect entry, more often than not, you'll get a reversal bar, what we call a confirmation bar. You'll be able to reduce your risk 2 ticks above it, 2 ticks below it. And guys, it's not uncommon at all to see trades entered at the perfect spot, reversal bars confirming the direction, stop movement in place, and even if it becomes one of those 20 to 30%, only losing $40 or $50 a trade rather than giving up that $200 to $300 on a loser. And buying those pullbacks, selling those pullbacks. You might initially say, but I only have 5 ticks to that fib. I only have 7 ticks to that fib. And if you got in at the top of the move rather than waiting for the pullback, you're right, there's no room to make money. But if you wait for the pullback to the area inside of favorable large triggers, that 5 ticks becomes 27 ticks. Things that you shouldn't let scare you, and this is where repetition comes in, guys, because this is all new user stuff. Trust me on this one. The small triggers will almost always turn against you at your entry because it has to. You have to lose momentum to get back to your entry. But the momentum that we rely on is defined on the large chart. Don't let these small triggers rolling freak you out. There's going to be fluctuations on the small chart that you'll never see on the large chart. It's not uncommon to see new users get in right at the top of a bar that they think is pushing the market without them, that fear of missing out. All this does is guarantee a larger loser if for some reason this is one of that 20 to 30%. All this does is reduce the distance to get to your target. So you're going to increase risk and reduce profit potential by jumping in, getting fearful on those fluctuations. And this is why practicing this entry is so important. This is why understanding and studying and developing trust is so important, because great entries create manageable trades. Great entries set you up for success. Great entries give you the opportunity to make easier money. And that's why we focus so heavily on entries for the first hour every day. And just for grins, I'm going to circle a tail. And guys, that's not a clear path. That was one of those potential to breaks. But just for grins, let's see what that tail looks like on a smaller, faster chart if we scroll back. It happens to be an exact push directly to support inside of favorable large triggers. This is your pattern. And watch this. I'm going to do something real quick. Do you guys want to go through an entry? Do you want to break it down bar by bar, talk about what we see, what we're looking for, why we're doing it? Would that help anybody? Wouldn't help anybody? That's cool. Maybe I shouldn't do it. There we go. I figured somebody, right? Why not? Let's do something during news. All right, so we're going to eliminate some noise. I'm going to take everything off but the triggers. I'm going to take everything off of this trade but the triggers. There is no stupid news, Andy. Only silly traders that trade into it. So as those come up, guys, we'll go through it. I'm going to give you a couple things. I'm going to give you guys this 101, chart reading 101, and this is designed to give you the ability to go back and take the pictures of each rule broken down individually. And when you do this, what happens is you'll be able to put them together to create a trade. You'll have that recognition of what it is that you need to see to make a trade happen. Strong triggers, weak triggers, clear path. Make sure you take the time to annotate the whys. Why is it strong triggers? Why is it a clear path? Why is it a termination condition? And what happens is you end up piecing these little things together, you start to create this correlation between words and the looks, and the advantages begin to pop off of the screen at you. So I'm giving you that. I'm also going to give you guys, let me find it. Man, that is still going. I hate the S&P for my charts. For whatever reason, the S&P clogs me a little bit. I'm going to give you a high probability trend trade checklist, guys, and this is a checklist that you can print out and put on your desktop, and this is designed to just define your entry, to let you know that the rules are met for the entry, and this is a way for you to police yourself. These are also the rules that I'd love to see you writing on your chart so that you can always associate these advantages with the look so that you can begin to speak to yourself in terms of advantages. I'm going to give you the exact same checklist with pictures on it. What it means to have a strong top or bottom, that termination that reverses the market with no triggers through. Steve Diego, you're going to need to know this if you're chasing those momentum trades. What it means to have momentum and what it means for the momentum to be gone. Termination, potential to break, clear path. You can also use this as you go back and take these pictures to make sure that you're taking them correctly. And it also gives you the windows of opportunities for both longs and shorts. And guys, that's in the room. The checklist is in the room. I've never had anybody use this checklist and do worse than 70% winners. And I'm also going to give you finally the KISS plan, guys. And this is in the room as well for both the medium probability potential to break trade as well as the high probability trend trade. And guys, the KISS plan is a stepping stone in your learning journey. The KISS plan is designed to optimize your chances of success with the high probability trend trade. This is by no means the end of the road for you, but if you learn to talk to yourself in terms of the advantages that the high probability trend trade provides, if you can look at your chart and say in a moment, I have momentum, I don't have momentum, my path is clear, it only has the potential. When you understand what you're getting into, you're going to understand how to manage that trade, whether you can be a little looser because it's high probability, or if you need to be a little more aggressive because those advantages aren't present. You will, through simulation study, class feedback, and continuous practice, you're going to create a plan, guys, that suits your needs. You're going to create a plan that just speaks to you, whether it's a different pattern, guys. You don't have to be a high probability trend trader. I never tell anyone in this room when to get into the market. I never tell anyone in this room how to trade. That's not my job. My job is to teach you advantages. And until you can create a plan based on your experience reading the indicators, this one's designed to optimize your chance of success. So everything about it is dependent on your ability to just enter the market in the right spot, because great entries create manageable trades. And then once you're in, you're going to have to manage it, guys. And your management plan should be just as mechanical. And that's what this gives you. Very mechanical, remove the emotion kind of approach to management. And I'm going to show you both the high probability trend trade entry as well as the very mechanical approach to management. So everything starts on the large chart, guys. Everything starts on the large chart. We're going to go through this. Large chart says up, the background is green. Can you give me a Y in the room if you're with me, especially new people? Can you see how on the large chart that background is green? And we know that it's going up. And the first thing that my brain says is, hey, I'm going to go up with the large crowd because these are the guys that create trends. And then my small triggers are above my large triggers, and my large triggers are widening, and the space between the two. And once again, guys, can you give me a Y if you see that this is a market that's likely to continue in the direction of the trend because of the momentum? It's likely to continue in the direction of the trend. And then this is what it's going to look like. Do you guys see how the top of the bar has not reached Fibonacci resistance? The top of the bar hasn't reached yellow 1-to-1s. The top of the bar hasn't reached a divergence high or low. And there's nothing below me. My triggers are above all the previous areas. And I have a clear path. And guys, this is the key. I have momentum. I have a clear path. It's time to look for an entry. So I turn my attention to the smaller, faster chart. I turn my attention over here, and guys, look at it. Red triggers, green triggers. It seems like it's going up, but that's not my high probability trend trade entry. And it continues up, and it goes up more and more and more. And I begin to get fearful. It's going without me. What am I going to do? It's still going up, and I haven't gotten into this trade. How am I going to get paid? And it continues up. And then we get the reversal bar. Does everybody see it? Everything's set up. My anxiety's kicking in. The dog is howling. The fish is floating on its back, and life is in chaos. And then I get a reversal bar. And the reversal bar isn't my entry. The reversal bar tells me, hey Mark, do me a favor. Draw a box from the top of the triggers to the bottom of the triggers, because this is where we expect price to correct. Can you guys give me a why if you're with me? The reversal bar is not the entry. We have to identify our favorable large triggers. That's a pretty big box, isn't it? That's a little daunting. That's a huge area for the market to continue. But my rules say that my window of opportunity is going to extend from the highest point of support to the lowest point of support inside of favorable large triggers. Here's my box, ladies and gentlemen. Here's my window of opportunity. This is where the market is most likely to continue. Whoop, the market's trading on the wrong side. I am going to activate a limit order, a tick or two above that highest point of support. And guys, this becomes the entry for the highest probability trend trade. And the market comes down, and I'm like, oh no, I hope it doesn't go without me. Maybe I'll jump in. And it comes down again, and I'm like, oh, I thought it was going. I jumped in at 37. And the rest of you that are following rules said, no, patterns repeat themselves. And now I'm in the market where the market is most likely to continue. Is everybody good with this? This is your entry for the highest probability trend trade. It doesn't guarantee a win. It doesn't omit all the losses, but what it is this is a pattern that has been proven to win more than it loses. So my only thing to do, guys, is to put a protective stop where the market shouldn't go. Right there. Beyond those large triggers, beyond those areas inside. And there's nothing for me to do, and I'm going through the KISS plan management as well. Right now, there's absolutely nothing for me to do. I've entered the market where the market is most likely to continue. I've put my stop where the market shouldn't go. And guys, the KISS plan is going to have targets in two spots. If I'm in at 34.75, 36.75 represents $100. And this is your first target. And it's already predetermined, and it's out there. We'll make it the color of money. And then your second target is going to be $200 in the distance. $200 from your entry. So 36, 38.75. That's the wrong one. So at 38.75, that's going to represent $200. Is everybody with me so far? We're still going through it. We have taken the best of the best entry, right? We have established where the market shouldn't go, and we've put a protective stop there. And now we're just in this little limbo where we're like, all right, let's see what the market's going to do. And the market goes through our entry, and some of you are starting to get nervous, but I'm still in the window of opportunity. And it comes even lower, and now you're looking at red numbers in the P&L, and you're starting to think to yourself, man, why did I take this trade? The small triggers turned against me. Why did I take this trade? There's a red fib, and I don't even identify areas on this chart, but it's got me scared. And then let's see what the next bar does. It comes down, and it comes down, and it comes down. Ah! And then it does what we hope it does. Then it does what patterns suggest it does more often than it doesn't, guys. Notice how it did go a few ticks beyond that correction point. I'm not putting a stop a tick past it, guys. We're good, but we're not great. We're not to the tick every trade every time. So our stop keeps us safe. And we get a reversal bar in the direction of the trade. And my new stop placement is 2 ticks below that reversal bar. It's just about the same for this trade. Is everybody with me? If I jumped in on the fluctuation, I may not have had the courage to keep my stop in the right place where the market shouldn't go. If I got in and hoped that the mid band was the spot instead of the big one, guys, it works this time, but with a little bit of study, you'll realize that the top of the window gives you the best chance of getting into that trade. Don't trip over a couple pennies hoping to save a few dollars. And now it's doing everything momentum said it's going to do. And now it's doing everything the clear path said it's going to do. And all I can do is I'm either going to hit my first target or I'm going to get stopped out. And I don't have any other options, guys. There's my first target hit. So you guys just made $100. That target goes away. One contract is off. And the KISS plan tells you, let's take all the risk off this trade. Let's go break even. So guys, you're $100 richer and you have absolutely no risk. And what you're doing is you're saying, man, with all this momentum and a clear path, it's either going to hit my second target or they're going to have to come get me. I'm not going to be fearful and I'm not going to go, oh, I better put my stop right up on it because I don't want to give it back. Your stop is break even. And that's your only option as a brand new user. But with all that momentum, there's your second target, guys. And that's a $300 trade with the advantage of momentum. That's a $300 trade with a clear path. That's a $300 trade from the areas inside of favorable large triggers. And if I put a circle right around that lowest point, that's the tail on your large chart. I don't have to trade tails. I can trade pullbacks to areas inside of favorable large triggers. Guys, this is nothing more than a pattern that repeats itself every day. This is nothing more than a pattern that creates a statistical advantage. Yeah, big news in 2 minutes, Andy. This is a pattern that creates confidence. Your job is to go back and circle those tails when the rules are met. To go back and circle those tails and write odds favorable momentum, strong triggers, Rule 1 is met. And then draw a line. And then draw a line to the top of the bar where it's not hitting an area. And say no terminations. Rule 2 met. And then guys, this is the most important one for new users, I think. Define rule number 3. I bought a pullback at an area inside of favorable large triggers. What am I doing? I'm associating rules with looks. I know, it feels like a lot of work to be a millionaire, right? I'm associating rules with looks. And then, even more so, get off of there. Actually put a spot where you entered, right? Say, this is where I entered, Mark. And what you're going to do is you're going to take this and you're going to share it. You're going to put it in that screencast. And then, Ron, you didn't know this one. I didn't tell you. Welcome back. It's good to see you back. Putting the screencast links is working so much better than just the copy pastes. So guys, you're going to drop your link in there and it's going to put this in here. And the second half of class is me going back looking at your charts. And if you said, hey, I had odds favorable momentum, we're going to verify that your chart read is correct. And if you said I didn't have a termination, we're going to talk about it and make sure that your chart read is correct. And if you said I got in at the area inside of favorable large triggers, we're going to make sure that you're following your plan. But if you show me the same picture and your entry's here, then you open the door for discussion about great entries. And if your entry is here, it opens the discussion for actually having momentum rather than just hoping it goes up. So posting in the room, guys, it's huge. And if it turns out that that's your best of the best, if that's your trade, that's the one that you want each and every time because it gives you those advantages, well, then you've got to come to your personal trade setups. You've got to drop it in there and say something clever like, never miss this look. And go find 50 pictures that look just like it, guys, and you'll be absolutely floored at what you can pull off. From the client trade section, guys, you've got entries and that same management approach that we just talked about. Your job is to study it. Your job is to create the recognition. Your job is to learn to trust it so that in the moment you can catch the trade. My large are up here, but my synthetic are down here. Notice that it blew right through the large. Kind of cool, right? Perfect, Ron. Thank you for that. I don't know what's going on with Discord. It doesn't feel like it has the bandwidth to be able to copy paste. And it's really hard for me to pick up those links sometimes. So, guys, are there any questions about the high probability trend trade? Here's your KISS plan. Here's how you keep it simple. Don't feel like you're shackled to this. But if you learn to speak to yourself in terms of advantages, if you talk about why you're doing what you're doing on charts, guys, what happens is you create recognition of patterns and you start talking about whether or not those advantages are, yours did about 6 upgrades when you turned it on. You find an entry that optimizes your chances of success. You use a very mechanical management plan because as you grow with the indicators, as you learn to read your charts, guys, you're going to be able to manage differently. And I'm going to give you guys one more thing and then we're going to take a little break so that everybody can go rest their eyelids for a second and breathe deep. Where is it at? I'm talking to myself right now. You have to know what you're getting into, ladies and gentlemen, so you know how to react. So before you ever sit down for a trade, David, we can do that every day. I don't mind. If it looks like I'm forgetting, maybe something shiny in my office is distracting me, remind me, David. Put a note in there that says, hey, can we go do that tick by tick? I'll do that all day long because I think that great entries create manageable trades. So there's 2 things that you have to know. There's 2 things that you have to know before you sit down to trade. Well, you know what? Let me rephrase that. If you're on simulator, you're learning these things. If you're risking your money, there's 2 things you have to know before you sit down. Why I will enter, right? These are my rules, the rules that create a statistical advantage. And guys, I have to be able to recognize them. And the more variation that you have on your entries, then the more likely you are to make a mistake, right? Too many things to think about. But you also have to know why you'll exit your trade. So the KISS plan removes those variables. You know exactly why you'll enter. You know exactly why you'll exit. So if you learn this trade first, if you get good at this trade first, you're going to be a chart reader and you're going to find more opportunities. But here's the deal, guys, is you have to commit to having your rules met. Stop believing that you know what's going to happen. Stop worrying about what happens. The rules are based on patterns that are proven to win more than they lose. That's why it sounds like I get my panties in a bunch when you guys can't tell me why you entered a trade. Because how can you repeat it? How do you know if it wins more than it doesn't if you're just jumping in and hoping for the best? And the more consistent in action you can become, the more consistent in profits you'll become. If you look at the most successful day traders, they do the same thing every day because the process yields the results. Rules remove the emotion associated with trading because you don't care. You'll never be in control of whether or not your trade wins or loses. The only thing you will ever be in control of is whether or not your rules are met, whether or not those advantages are in place. But if you don't know what kind of trade you're in, how do you know how you're going to manage it? So I created this, guys, and this is by no means the gospel truth on exits. But from teaching this class for as many years as I have, the one thing that I've recognized repeatedly is that most of you will find the perfect entry. Within the first week, you'll be able to nail an entry on a high probability trend trade. And then management becomes the second part. Management's where it gets tricky, guys. Management's where you've got to go through the emotions and the fear of loss and do something with that great entry. So if I'm in a high probability trend trade, what's it going to take to get me out? You need to stay on simulator until you know these rules like the back of your hand. And you can follow them. And one of the things is once you start hoping for wins, you'll abandon your management plan. It's just I see it all the time. If I'm in a 50-50 trade with the potential to break, it's a different management plan. If I'm in a momentum trade, it's a different management plan. If I'm in an HVA trade, it's a different management plan. Have you guys seen The Last Samurai? The scene where Tom Cruise is getting whipped by the samurai dude, and the kid comes up and he says, "Too many mind." Too many mind. You're thinking about too many things at once to be successful in your endeavor. Guys, if you're not good at the high probability trend trade, if you can't do this, like you don't even have to think about it, adding something else is going to create confusion, because you're going to begin to manage 50-50 trades like a high probability trend trade. You're going to try to use the same management on a momentum trade that you might on a different style trade. So make sure that you know the basics first, and it makes life easy. Potential to break at the bottom. What did it look like? Oh, divergence. Divergence on a 50-50 trade kills trades. It's in the KISS plan. Price reaching an area, no triggers breaking through, says no more long trades. It's in the KISS plan. Price reaching fibs, no triggers breaking through, says don't go long. It's in the KISS plan. So guys, this KISS plan is designed to optimize your chances of success. Are there any questions about high probability trend trades? Weak triggers says anything can happen. That anything was that it blew past areas that weren't inside of favorable large triggers. Why do I have a feeling some of you guys are going to show me this one? Maybe. I wonder if anyone took that entry, made $100 and got out break even. We'll find out. We'll find out in the second hour, guys. In the second hour, that's it. Read what Ron just said. That's wisdom. So guys, when we come into the second hour, we're going to talk about high probability trend trades. We're going to look at your charts. I'm going to relay back to momentum, clear path, and an entry area. If it's going to hurt your feelings that I told you traded into a termination condition, then cover your ears, because I'm going to talk about these three things every time. We're going to talk about entries. We're going to talk about exits. We're going to talk about momentum, clear path. And we're going to talk about the path of least resistance, guys. We're going to talk about the easiest way to get to where you want to be. And if there was an easier way, I'm going to talk about it. And if you nailed it, we're going to high five. And if you wrote a rule on a chart that said, hey, Mark, I had weak triggers right here, I didn't want to take the trade, it opens the door for a lesson on momentum. And if you said, hey, Mark, I had a clear path right here, it opens the door for a lesson. And that's all we're doing, guys. The goal is to collectively get smarter and to recognize advantages so that you can create a plan that suits your needs based on your ability reading the indicators. So I'll be back in 5 minutes, guys. I encourage you guys, go take a lap. Walk, stretch your legs. Don't fabricate trades because you've been sitting in front of the monitor for too long. I'll see you in just a couple minutes. Can hear me just fine. Good morning. All right, guys, I'm back. Just didn't quite make the mid-band, did it? And guys, sometimes the small crowd doesn't make it. What do you guys think? Give me a why. Do I have odds favorable momentum? Do I have a clear path? Even though it missed you by a tick, what do you think? Should I go ahead and put an entry order a couple ticks below that mid-band? Does that fit the rules? How do you see 50-50, Morgan? Smalls and large are below support. Support's now behaving as resistance. Large not broken on what? The fib? Or the mid-band? Oh, your chart. I can't see your chart. Your girlfriend told me to take the cameras out of your room. She's like, that's creepy, Mark. Don't do that. So on my chart, guys, this still fits the rules. And it's probably going to fit the rules. I'm hoping that it pulls back before it gets to a termination. And that's really what we're looking for, right? So I'm just going to leave that up while I scroll to the top of the room. And let's look at some of the pictures presented. There was a lot of chatter this morning. I'm not going to go through all of it. You guys feel free to look through it. Let's see what we have. And just a reminder, guys, Discord's not letting me pick up your pictures. If you post them in, if you paste them in, I need to see those links to be able to catch it. Lower divergence on the 1-to-1s. Where was that? Right there. So that's a good looking top, right? Small triggers were above the large and you're like, man, no trades up or down yet. Don't have momentum, don't have a clear path. Totally in a holding pattern. Nice picture, Paul, of just saying, hey, my rules aren't met. And then, Paul, this is that same 2004 trade. Guys, this is a brilliant trade, and I want you to see this. Termination condition. Small triggers roll. Paul takes a little momentum style pullback. The immediate momentum on the large chart is there, even though it's not odds favorable. And he takes the perfect momentum style. Steve Diego, that's your trade. That's that momentum trade. Steal it. And Paul, you couldn't have done this any better. And you got out right at trouble. Absolutely brilliant. So termination, no triggers through. It's not aggressive at all. Paul, this is 100% rules-based. 100% rules-based. And this is why you have to know your rules. Good top or bottom, reversal breakout, Fibonacci preferable. The T3 trigger lines can't get beyond. Paul, rule number 1 is met. Oops, hold on. Don't reach the next area, no termination conditions present. Paul, oh, I keep going to the wrong one. Yep, rule number 2 is met. Pinpointing the entry involves looking for specific indicators such as Fibonacci lines, mid-band, or 1-to-1s where the small triggers are at or beyond the area for entry. Utilizing this technique will define the entry area for each trade. Paul, perfect. 100%. So Steve Diego, if you're trying to learn the momentum trade, if you're trying to find the best of the best way to take advantage of these bottoms before the trend trade, that's it right there. Paul gave you guys a 100, you know what? I'm going to steal this because I love momentum trades. I'm going to go to my spreadsheet and I'm just going to put it in the Hall of Fame for Paul. And I'm going to call it Paul W's Perfect Momentum Trade. 100% rules based, right? There you go, Steve. So you don't have to scroll up and grab it. I'm going to put it in the chart for you. Guys, this fits the rules that Nexgen teaches 100%. This is an easy one for me. But you notice how I'm not nervous talking about the entry. I'm not nervous talking about whether or not the rules met. I'm just going through it. I'm going through a chart that isn't moving. And I'm talking about the advantages, and I'm discussing them, and I'm committing them to memory. And if I do that enough, guys, when the market is moving, it takes absolutely no effort to be able to see it set up live. All right, let me scroll up 3 days and get to the next trade. All right, Jonathan. Jonathan was just asking about it. I love this. Man, there's 3 areas in the exact same spot. Is this significant? Hell yeah, it is. Because it means that not only was there enough to create a fib, there was also enough to create 2 forms of one-to-ones, which means that this price range is creating a huge concentration where the people that move the market know exactly where there may be decisions made. So yeah, if there's 4 areas instead of 1, it's way bigger. And then Jonathan, next trade, let's take a look at it. And this is where people hate what I have to say. And this is probably where I love saying it. Base hits are good. Nice job, Gary. So Jonathan, when I look at your chart, momentum is great. I love it. Momentum is great. I love it. And there's this big, ugly red fib right in the way, right? There's a termination condition in the way because when you enter this market, price reached the area, and you can see on the bar, and I'm going to zoom this in real quick. You can see at the point of entry, 200 per screen, Ron, that price reached the area and none of the triggers broke. Is this my best look for a long? I'm not saying is this a look where I should never trade, but is this my best look for a long, trading directly into the area with none of the triggers broken? And I believe in the room you said that 3 of the 4 triggers had made it through, and maybe you were referring to the one-to-ones. But this particular trade is directly into Fibonacci. All the triggers are still below. It has the potential to hold. That's all it is. It has the potential to hold. The momentum is there. Everything is up, coming from the good bottom. And the feedback that I had, guys, I'm not telling them to not take the trade. I'm not saying this isn't your trade. You can't take this trade. You shouldn't take this trade. Guys, give me 1 second. I need to go rescue my dog. Hold on. Alright, sorry about that. So this is what we do in the classroom, guys. Hey, let's create a thinking point. Let's talk about something here. What if you said, man, this fib with no triggers through it is a problem area? What if I wait 1 or 2 more bars? 1 or 2 more bars. And at least let my small chart get to the other side of this fib that could stop the market, right? And then I'll put my risk just below the fib because I expect the fib to break with all that momentum. Guys, what happens, the difference between trading into areas and the difference in trading from areas can be the difference between making a lot of money and losing a lot of money. Why? Because we know, without question, if you've done any level of study, you understand completely that termination conditions can stop a market. If you've spent any time at all scrolling back on a large chart, you've seen how many times fibs screw things up. You've seen how many times fibs take away the advantage. And you begin to develop this mentality that just says, hey, I'm going to trade from the areas. on the other side of problems rather than trading directly into them. Jonathan, does that make sense? Because I love the look on the chart. This is where I'm just obligated to say, if fibs stop the market, why not trade from it rather than into it, right? Why not trade from the other side of troubles? Just a thought. But again, guys, do whatever you want to do, but tell me why. Tell me why you're doing it. You entered on the strong bottom, odds favorable, path almost clear. I love that. 3 of 4 throughout a single fib. Not true. Absolutely none through. And the 13 too smalls do have an effect. It's a big chart. So I like the trade. I think that you could up the potential win percentage by not trading into areas. Just a thought. Paul W. Let's see what you did. So Paul dropped this one in there and said, hey, you know what? The small chart looked great, but I didn't take it because of the large chart termination. Which is Paul saying, hey, my rules aren't met. I'm not going to take this trade. And what I did, and guys, this is how trading plans are built. As I said, so Paul, what if you change your annotation? This is how plans change, guys. I have a strong bottom. I have odds favorable momentum. If Paul decided to take this trade, right? Paul would be saying to himself, there's no divergence, strong triggers off the fib, so I entered with a confirmation bar and took half the profits at trouble in case it held. I'm not telling Paul to adjust his plan, but I'm saying if Paul does take this trade and drops it in the room, tell me why you're breaking your rules, guys, because a lot of times what you're going to find is that your reasons are valid. And Pete's in here. Pete probably took that long because of the strong bottom, because of the low risk, because of the no divergence, because that's kind of how Pete trades. I know that because he posts in the room and he writes his rules and we talk about them, and I love his trading plan because it's based on advantages. Andy Man, good to see you back in here. Andy Man said, oh, that looks familiar, doesn't it? We took this one together. There's, well, same look. There's momentum. The path is clear. Pull back to support. Stop in the right spot. Paid quick. And it just stopped short of your target. Dag nabbit, and they got you. That's okay. Beautiful trade, Andy. Beautiful trade. Red Rob. 3 divergences. That's a termination condition, isn't it? Absolutely, Rob. Perfect recognition. 3 divergences. That's just an ugly look. Great job. Great read, dude. Great read. Pete. Weak triggers at a fib, reverses the market, odds favorable. He takes the pullback right to the small triggers off the termination and gets paid. Pete, absolutely beautiful. Paul W., that was your trade the other direction. And there it is again. Odds favorable momentum, 50-50, no divergence, perfect entry, getting paid at trouble. Pete putting on a clinic. Absolutely beautiful. All right, Miss Clara. Everything says up. It's strong. Absolutely weak bottom, but still great. Pulls right back to support, and you enter the trade, and you get out at resistance. Is that inside of favorable large triggers? That was the question. Let's go find out. Yeah, no, Rob, it was perfect. All right, so Clara, are you with me? I actually really like this question because I think it's a wonderful lesson here. Come on, come on, come on. Here it comes. Is this entry inside a favorable large trigger? So here's your large triggers, and here's your synthetic triggers. Do you see how the lines aren't inside of either? It's between, but not inside. So is it inside of favorable large triggers? I have to say no, just from trying to keep it as black and white as possible. But let's go a step further if we can. If you say price could correct to here or price could correct to here, doesn't it make sense? And maybe I want to make sure that it makes sense to you, not just me. That if you enter above the second correction point, your stop still has to go 4 or 5 ticks below. So if my areas are a couple ticks above the synthetic triggers, I don't have a problem with that because my stop still has to go where the market shouldn't, 4 or 5 ticks below them. It's when your areas are down here, way on the wrong side of the correction point, that's when it becomes problematic. And your window of opportunity, Clara, whoops, sorry, I'm throwing stops in there. That's your lowest point of support inside of favorable large triggers are these 1-to-1s, right? Does that make sense? Once you think of these triggers as a correction point, there's two options where you either have an entry area just on top of the correction point and your stop has to go beyond it anyway, no matter what, that's your exit rules. But once your areas get to the wrong side of the correction point, that's where things become problematic. So while you're not inside of triggers, you're above the correction point, which means that your stop placement goes 4 or 5 ticks below the triggers. And then once you get that reversal bar, your stop is way up here coming into fibs. Beautiful job. Nicely done, Clara. I hope all that made sense. One thing that you don't have going on your chart here is synthetic fibs. You're welcome. You're not showing your Fibonacci areas from different time frames. And that creates a huge advantage because right at 60.94, right here, it would have let you know that this was almost to a fib. These fibs typically print on the large chart as well. So you need to make sure that your tick data is in place because the large chart, guys, it actually runs 3 different time frames. And this is what creates the advantage. This is one of the things that creates the advantage. Is on your large chart, get over here, you're going to have fibs from the 5-1 chart, you're going to have fibs from the 21-3 chart, and you're going to have the native fibs from the 13-2 chart. And all of these are equal in power. All of these have the potential to stop the market. So when price gets to a fib, whether it's the 13, whether it's the 21, whether it's a 5-1, guys, you have to be aware. And you don't have any of those on. Yeah, so what you need to do if you don't have those synthetic fibs, guys, is you need to right click on your large chart and first of all go to data series. And when you click data series, make sure that that tick replay is checked. If it is checked and you still don't have those synthetic fibs, couple things you can do. Reload all historical data. Sometimes that'll clean it up and fix it for you. You can also right click and you can reload the template for the 13 Renko chart. But do you notice how I've got a 21 fib? That's right where it stopped here. A 5-1 fib created the bounce here. And a 21 fib created the bounce here. So all of these areas come into play. Look at that, just below. And it just becomes, it helps, it creates an advantage. And guys, remember, if you can't make it happen yourself, Jason is in tech, just waiting to make it happen for you. I'm not very techy, but I recognize a couple things. I know a couple ways to fix things. And then Miss Clara again. Let's see what you got. Everything says down. You take a pullback to the mid band right inside of the triggers. And then Clara, stop loss initially 4 or 5 ticks above the triggers. And then once you get a reversal bar, stop loss 2 ticks above the reversal bar. That's the KISS plan. Because what happens is if you put your stop loss right here, you're still in the correction point. Does that make sense? And I love that you exit at resistance. Nice job. Great trading this morning. It's almost like you've studied and found the simple patterns and you're just capitalizing on them. That's the stuff that makes me happy. There's no doubt in my mind anybody can do this. Anybody can be successful with this software once you just remove some of the noise that you don't need. Once you focus on the best of the best, once you commit yourself to taking the easy trades first, it's almost like it becomes easy. Andy, odds favorable, clear path. And you said had to close your order entry because of news coming up. You still had 8 minutes, Andy. I'm typically, and Andy, this is just me, I'll hold almost 2 to 3 minutes before news because I don't expect the reaction 4 minutes before news. I expect reaction from news or maybe even a minute after. So if I'm 8 minutes out, all day long, I'll take that trade, and then if it just doesn't do anything, I don't care what Ron does. He's senile. We don't mess with Ron. He had to take it during news so it went quick so he could go yell at kids to get off his lawn. Odds favorable, clear path, and then that's the momentum trade. And Jen, this is you. I love this. So it pulls back, right? There's a potential long. You get a divergence. It's the exact same long, same rules. Second lower divergence. Maybe a reversal bar for confirmation. So you could have entered and exited this trade a couple times. And notice that the large chart never changed. This is the part that I want you guys to see. Do you see how the large chart never changed? It is. The large chart always said, here we go. The large chart, despite all of these fluctuations, never said anything. And Jen said, I don't need this nonsense, this 50-50 divergences, blah. But when everything agrees, the momentum is insane, I'll take that momentum style trade that Nexgen teaches that says let the smalls break through the area and pull right back to it, and I'll get paid at 82.50. A couple ticks below trouble. Jen, this is beautiful. Great patience. Beautiful patience waiting for that trade. Your rules were still met. This one is a definite. Since it's 50-50, this one doesn't fit the KISS plan. This one takes it completely off of the chart. But once you get smalls and large above that divergence, it sets up perfect to take advantage. Nicely done. Patience. You don't have to be in every move to get paid, do you? You don't have to hope an area breaks, just let it break. You don't have to wish that it would go up, just let it start going up and then find a way to go up with it. Nicely done. And then Ron, I'm going to try to get your picture to come up. Oh, there we go. You did it, screencast. Ron took the same trade. Everything is up. He lets price clear trouble completely. I wonder why. Because price reaching an area is where things can go south. Ron's devised a plan where price clears area with odds favorable momentum. He takes advantage of the same momentum and gets paid. Absolutely beautiful, Ron. Nice to have you back. I just feel more secure having you in the room. Joel, that fib print tried to mess with you, right? Joel, you had odds favorable and you did have a clear path. And then that fib update showed up. You were solid. Everything was up. You take the entry at the mid band, and this is NASDAQ, Joel. So when those small triggers were against you, you could have gotten the same entry on the correct side of the triggers with established risk. And that's just a NASDAQ thing. Guys, and I had a talk with someone over the weekend as well. NASDAQ entries require a different level of patience. Do you see how these small triggers acted as resistance right there? That happens a lot because this is a 13-2 chart, not a 5-1 chart. So you can see that happen off these triggers, and sometimes it'll happen 50 points past your entry. So on the NASDAQ with the 13-2, that first close on the correct side of the triggers at least puts you on the right side of that momentum, and that's just a NASDAQ thing. Large chart was perfect. Everything was beautiful. And this is just one of those entry nuances, and then you get out of trouble. Just great job, Joel. Great job. And that's a NASDAQ thing, guys. NASDAQ's not like the other markets. NASDAQ's not built like the other girls. Ron says base hits are good. What does that mean? Base hits are good. But Ron, are you suggesting that with odds favorable and a clear path, you found a way to capitalize on little $110 moves rather than hoping for home runs all over the place? It's a wild land, Morgan. That's all right, Joel. When it's right, it's right. It's just, it'll help you eliminate a couple of the losers that you don't need to lose against those triggers, yeah. Guys, when I talk about having something that's repeatable, when I talk about having a plan that looks exactly the same, when I talk about embracing momentum in a clear path and then you'll find your path, Ron C. does it better than anybody. Well, actually, that's not true. GWC, are you in here? He does it about as well as Ron, and Zorro's really close. But it's all about momentum, and it's all about a clear path, and it's all about advantages, and then look for an entry. It's not about looking for an entry and then hope you had the advantages. Morgan, clear path but not the best momentum. Look at this. And price gets through and pulls back to support. You have one line, right, Morgan? You have one line inside of those triggers, and it also happens to be the line that just got established as a clear path. And you said, you know what, I'll trade this line because I'm going to have virtually no risk, and I'll get out at the first trouble because hey, it's not perfect, and I'll get out at the second trouble because my goal is to get paid. Morgan, virtual high five. So Morgan, let me ask you, did not having odds favorable momentum play into your decision to take quick profits at trouble? Did not having odds favorable momentum make you insist on having the least risk possible? Congratulations, Morgan. You're reading your charts and making decisions based on the advantages that you read. I love everything about this. And then Morgan, this is one of those instances. Your exit's perfect. Your exit is beautiful. But if you were going to try to hold for that home run on the last, notice that he took everything off except one. Brilliant. Money in the bank. Money in the bank. As long as you are left of these small triggers, as long as you don't get a close on the wrong side, that market's going up, brother. And that's where I hold for huge moves on the last one, because every now and then you get a giant runner, and as long as I don't get a reversal bar on the wrong side of these small triggers, you can hold this thing for the duration. You'll get to that point. This is beautiful. That's the perfect entry, or the perfect exit. To take away, to take away the take profit and just run off the, that's what I do. I'll move my profit way off in the distance, and I'll literally follow a reversal bar marker with my stop loss. Great trade. You guys making me proud this morning. Andy Man. Andy Man can. Odds favorable. Everything's down. Fabricating an entry a little bit. We don't use pink 1-to-1s on these smaller, faster charts, but it worked out beautifully. And guys, can I show you something? What Andy did is he took a momentum style trade, which says that when the small triggers break 1-to-1s, sell the 1-to-1s. And Andy, is it fair to say that you took this entry understanding that your stop had to go outside of the triggers? So you were okay with the risk based on the look. Is that right? You understood where the market shouldn't go and you accepted the risk? And then you didn't trust the trade. You had odds favorable, clear path, everything red, everything screaming down, and you got out for 4 ticks on 3 contracts. Your first exit is questionable. Your first exit tells me that you don't have much of a plan. I see 3 contracts. Look at that. Blah. Okay, so target 3 at 81. Am I reading that wrong? I could be wrong. Man, when everything says down, Andy, so this is how management's going to happen for you guys. What changed from your time of entry? What changed? You got about $100 collectively on that one. But what changed from your time of entry? Nothing, right? Nothing changed. It just kept going in the direction. And then once it got back into these triggers, you knew exactly. And then Morgan, do you see that? That's that reversal bar marker taking and waiting for it. That's what Andy did. So Andy, a lot of opportunity to not settle with $90. Lot of opportunity to make a lot of money on that trade with that look on the large chart. Bad bottom, not a clear path. Large triggers didn't break, right? Not a clear path yet. No divergence, perfect entry, get paid up to trouble. Nice job, Joel. And then Joel, you don't appear to be running synthetics on your large charts either. And then Erla, can you do me a favor, because I don't want to miss out on anything. Erla, can you put one of those screencast links in for me instead of pasting the picture in the room? And if you need help with that, let me know. But unfortunately, Screencast isn't letting me pick up these pictures that you guys paste in the room. I can only grab them if they're screencast, if they're the link to open it up in a browser. If you need help with that, Erla, let me know, because I want to see your picture. I want to see your chart. And then Miss Jen. Ticks from resistance, no triggers through. Odds favorable momentum. Steve Diego, there's your momentum style trade once again. No triggers through, everything rolls, odds favorable. Pull back to the 1-to-1s, giddy up. And then you sold again. Oh, you didn't take the snap back because it hadn't cleared trouble. Fair enough. And then there's the one. Sold it and wrote it. Nice job, Jen. Where did you get out? Did you get out at the fib? A few points above the fib. Andy, are you in a good mood today? Are you happy? Not the same trade as Andy's, right? Same entry, same beautiful entry, different management. Same beautiful entry, different management. You're hangry, go eat, man. If you're not in the right frame of mind, don't trade, go eat. Trust me on this one. I've been hangry, I don't do hangry well. Nice job, both of you. The entries are spot on. Guys, once you get the entries down, everything else works out. All right, Pete, everything says down. Absolutely perfect. Pull back. Pete had a fib there. And then you covered at 81.85. After divergence printed, 30 ticks. So, Pete, can I ask a question? Can I do a management lesson? Oh, Erla, we got yours up too. Awesome. And this is for everybody. And Erla, yours came up, so I've got it in just a second. It only took it 4 minutes, but it did come up. All right, we're going to take the picture real quick. So, and we'll just get rid of the large chart. We know the large chart was great. So you said that you covered at 81.85. And I don't disagree with covering at 81.85. The challenge is that you covered when it was bouncing right below a mid-band, everything down, clear path. If you're going to cover at 81.85 because of divergence, that's right here, right? Not 4 bars later, and maybe you didn't recognize divergence. But guys, one of the cool things that you can do is, and you don't have a reversal bar marker on your chart, Pete, is if you know that divergence is going to be an exit condition for you. So for example, if I'm in a long trade right now and I know that divergence off of this fib is my only exit condition, I'm going to know whether or not divergence is true a couple ticks after this reversal bar marker. So Pete, if you were holding and you're like, man, divergence is going to take me out, you could have a stop 2 ticks below the reversal bar marker, and that'll give you reaction time because you'll know like a tick before that whether or not divergence is true, and then it'll decrease that reaction time, right? Instead of getting out here back on the way down, you're getting out at divergence and it'll tighten up that. Right click and let's go to indicators. And T3 Fibs Pro Trader Synth New, I believe, is the one that we're looking for. Here we go. I'll take a picture of the picture for you here. But I love using the reversal bar. I'll use it for management all day long. So it's the Synth New, and then it's reversal bar marker 1 right there. And that'll be the one that puts it on there for you. Because I'll use that for confirmation. I trade the NASDAQ. So I have trades where in order to enter the trade, I have to have a reversal bar in the direction of my trade. So if you have that stop there, right, and you never get it, you never take the trade. So hopefully that's helpful. And that just, it just creates reaction time. You're welcome. All right, and Erla, yours came up. Let's take a look. Erla says, odds favorable, everything up. Man, you're testing my eyes. Everything up. Erla takes the best entry you could ever take in a million years. And then Erla, you decided to trade right back into that termination condition. And this is okay, right? But gosh, from 18 to 23, you made 5 points beautifully. 5 points beautifully. And then you gave it back on the commissions of this trade, right? It's okay to get paid at areas. And then once divergence prints off a fib, you're losing those advantages. And by jumping in halfway up, there's just no room to manage it. So, I mean, great job not losing at all. But man, wouldn't it suck to take the perfect exit and then give it all back when the termination condition wins? Something to think about. Great trade though, Erla. Really great trade. Clank, you need help. Hey, Clank, can you do me a favor? Can you put that screencast link for your trade in there? Otherwise, we have about a 5-minute wait for that thing to open. I've clicked on it 3 times, so hopefully it'll open up for us. If you need help with that, let me know. Yeah, no worries. Are you using Snagit or are you using Capture software? Okay, which one are you using? Because I can give the lesson on either. I could give the lesson on both. Let's do Snagit first, since I'm waiting for TechSmith to come up. Oh, there it is. Your trade is beautiful, though. You definitely don't need help with the trade. The trade is sexy as all get out. Look at that, pinpointing the entry. Holy crap, Clank. All right, so if you take your picture on Snagit, Clank, share link. Mine defaults to screencast, so I just have to click share link. If yours doesn't default to screencast, just go to the drop down and hit screencast. And what it'll do is, well, this one actually gives you the whole link. I just click share link, and what it does is it gives me that screencast link. And then once it gives me the screencast link, I drop it in the room. And that way, I don't know what it is with Discord, but it's creating these challenges, getting me to be able to click on just the copy paste. I don't know if you guys are having challenges with it. It might be my own personal hang up. And then it comes up over here, and I'm like, oh man, look at that. Odds favorable, everything is up, and no divergence, and perfect entry, and quick profits, and second profits, and life is good. What a great trade. And then if I'm using TechSmith Capture, it's the same thing. I click that big red button, and I take my picture. It's just click and drag. And then once I click the camera, it gives me the capture image preview. So instead of clicking copy and dropping it in the room, I'm going to click the upload. And when I click the upload, it's going to give me the screencast. So then I click copy and I drop that in the room. And then that creates that link that's easier for me to chase. Hopefully that's helpful. Strong triggers can break areas, right? Maybe not an entry anywhere. And now we're directly into a termination condition. And we have to sit on our hands for a second. Have to be patient. Have to wait and see what they do. On the S&P, man, look at that termination condition that reversed the market. No divergence, strong triggers, everything up. Do you guys recognize this as a termination condition? Price reaches a divergence high. All of the triggers are below. Paul W., do you remember your picture earlier today? Right now, Pete's saying because of the strong bottom, because of two areas, maybe some of you think, well, I'll trade into this termination condition. My rules say, the KISS plan says I'm not allowed to. Does that make sense? My plan says that termination conditions may stop the market. This pink line is just as powerful as this blue line. I don't have any triggers through it. Someone else knows about it. Does everybody see what the small chart's doing there? There are people that say, you know what? If I get a reversal bar in the direction of the trade because of the strong bottom, because of odds favorable, I'll take it. And if I never get a reversal bar, guys, off the areas, then I never take the trade. I'm not advocating breaking rules. And look at this, and now we're pushing down even lower. Terminations for the win. That's a strong bottom. It's beautiful. But terminations for the win. Terminations for the untradeable bounce. What do you guys think? How many times do you have to see that to learn to believe it? Did anybody go long into the divergence high and lose? It still may go up. That's a strong bottom. But this termination created an untradeable bounce. And this is where, Pete, where I might say, I love this look, right? I love this fib. I love this momentum. If I get a reversal bar in the direction, I'll take a shot. I'll manage it aggressively. It's not high probability trend trade. If I get in on the reversal bar, I got to get paid at these 1-to-1s. But I know exactly what I'm getting into. Guys, the market went one tick above that pink line. That pink line was a line in the sand. That pink line is exactly where the sellers stole momentum from the buyers. That pink line is where the sellers said, you know what? Try it again. Let's see what happens. You guys knew about it before the market ever got to it. You guys had what looks like about a 10-minute advantage to get to recognize and then make the choice on whether or not you were going to trade. Do I have any new users that are still working on the basic concepts? Because that's a great picture to take. That's a termination condition. That's a termination condition. Has the ES been doing this all day? Well, that's a textbook termination condition. That was trading to the termination condition. A lot of you guys caught that trade. That was weak triggers, one tick off of a termination. Remember, these are areas. There's the termination condition. There it is again. And again. Oh my gosh. So what do you guys think? I love it when the lesson is this strong. If we started on June 30th, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Guys, there are 15 instances where price reached an area, the triggers didn't break it, and it stopped it cold. 15 instances. This is why rule number 2 is a rule. Because it takes away your advantage. What does that mean? It means that I have to sit on my hands and do nothing when there's nothing to do. So guys, we've gone through all the pictures. We've got the live market. We've done the feedback. We've talked about advantages. I'm going to go take a break. When I'm done, when I come back, it's going to be on you guys to talk about what you want to talk about. If there's a concept, Steve Diego, if you want to scroll back a little bit, maybe we find a momentum trade or two, see if the rules are met at some no triggers through terminations. We can do it. I don't mind. You guys are going to control the last hour. I'll see you in 5 minutes. All right, y'all, here we go. Last hour. Odds favorable, no clear path. Pull back to support inside of favorable large triggers. What do you think? Is this going to be the time it breaks? I don't know. Never know. That's the beauty of it, is I never know. The only thing I'm ever sure of, ladies and gentlemen, is whether or not my rules are met. The only thing that I'm ever sure of when I enter a trade is whether or not the market's telling me that I have what I need, that it's a pattern that's been proven to win more than it loses. This one may break, right? And I'm going to start rationalizing breaking my rules by saying, well, there's 3 divergences, so this has to break. Well, there's odds favorable momentum, so this has to break. Well, XYZ 1, 2, 3, this has to. It has to. It's obligated to. Guys, it's not. It's not obligated to. And you guys, everyone in this room, know that that's a termination condition. Some of you will choose to ignore it. Some of you will pretend to be surprised when it stops the market cold. You'll be like, oh, wait a minute. I didn't know it might push me past my mid-band. Wait a minute. I didn't know this had the potential to stop the market, but it does. Most certainly does. Whoops, that's my untitled workspace. Sorry about that, guys. Let me close that bad boy. Crude oil had a 50-50 on the tail end of momentum with no divergence, and it pulled right back. Tick below, maybe a little confirmation. Some of you decided to take it, right? But the same weaker triggers down here reversed the market completely with a clear path. So it's all about advantages. All about advantages. You guys want to see something kind of cool? Do you notice anything on the small chart? That's awesome, Ron. Bigfoot in the mountains. Does anyone notice something on the small chart that might have kept you out of that last attempt at a short? You guys remember the one time on a small chart rule number 2 is not met? 3 divergences. If you learned that lesson, you didn't take a chance right here. You didn't hope that it was going to make the move all the way down. And that's kind of what we're at here. Stuzio, can you do me a favor and put the screencast link in the room rather than copy paste? I want you guys to see this. This is, well, of course, if I change screens, it pops right up. I'll try to open it. But guys, I'm telling you, the screencast link. Ooh, that one worked really quick, Stuzio. There it is. Morgan, can always count on you for the good gifts. Let's see what we have. So Stuzio, everything says down with momentum. You get in and you get paid. You get in and you get paid. You get in and you get paid. And then the momentum changes direction and you get in and you get paid. Wait a minute. There has to be something more to this. Everything says down. You take a snap back to the 1-to-1s and you make money. And everything says down and you take a snap back to the 1-to-1s and you make money. And everything says down and you take a snap back to the mid band, but it doesn't quite get there, so you get in a couple ticks late. Maybe not a lot of money on that one. You weren't confident going into that one because he's getting paid, Pete. There is $110. There is $110. And there is just a tick on that one. So that's 210. 310. So some of you are like, Stuzio, why don't you just hold on forever and hope that you make more money? And Stuzio's like, to hell with you guys. I just made the most effortless $300. I'm going to take your commissions out, Stuzio. And if I do this every day, that's simple, get paid, that's an extra 75 grand. And Stuzio's like, but I believe in this, so eventually that's going to be a 5 lot. And while you guys are praying to make more money, I'm just going to get paid and go buy an island. And Mark's invited because Mark likes islands. And that's kind of what we're going to do. Stuzio didn't have to hold for the big move. He didn't have to make $1 million a trade. He didn't have to do anything other than recognize a couple advantages and get paid. And I love this plan. There's other people in this room. that say, hey, you know what? You don't have to get all the money. Just get your money. Rob, if Red Rob had the microphone right now, Red Rob would say, hey, you know what? If you walk into a bank and you say, give me all the money, you're a bank robber. But if you walk in and you say, may I have my money, please, you're going to walk out with your money. You're a customer. Stuzio, absolutely beautiful trading. Of course they do. Everybody does. Steve Diego. Price didn't clear the fib. You still have a price bar. So no clear path. I'm trying to figure out where to start reading. Strong bottom, I agree. Strong top, I agree. Strong triggers, rule 1 met. Yep, I'm getting your order here. No clear path, rule 2 not met, but with a strong bottom, the 50-50, the odds work better. Divergence on a 50-50 absolutely sucks. But with a strong bottom, you wait. How did that get you break even? Oh, did you get, hold on, you're in at 93.25. Or 33.25. I've got a picture to address that. And after 3 divergences, you're out. So you take the first one at 100. I don't know how you got 100 from 33 to 30. Oh, did that go to 38? It did go to 38. Nice. Quick profits, break even. Second divergence takes you out. No worries. Third divergence says no more. Hey, Steve Diego. Great job. Rules for entry. Rules for exit. Not sitting and hoping. Reading the small chart. Recognizing changes. On what isn't a high probability scenario. Guys, this is how you do it. When you know what you're up against. When you know what you're up against, you know that everything's not a home run. I love this, Steve Diego. So you made $100, right? That's it? So if that's the best you did 3 times a day, are you cool with an extra 75 grand every year? $300 a day, guys. Doesn't that feel like nothing? True story. If someone says, hey, you can make $300 trading a day, doesn't that feel like nothing? You're like, that's not enough money, because your brain knows the potential. Your brain knows the kind of money that you can make as a day trader. But why not start small? And you know what's kind of cool? And you guys that have 401ks will appreciate this. Is you could have $100,000 in your 401k and people are just apeshit crazy happy for a 4% return. People love a 4% return. You guys are making this monthly on the crappiest scenario ever. Isn't that crazy? Yeah, no, I noticed that. You were already out and then you just weren't looking for the next one, right? So the game doesn't end because you're out. You're still reading indicators. I've actually really enjoyed that, Steve Diego. And I really do like saying Steve Diego instead of just Steve. Or if you were flat broke, that 4% would be great, right, Morgan? But that's the difference. That's the difference between what we do and people that are like, people ask me all the time, oh, you day trade? What do you do, like penny stocks? I'm like, no, I trade the NASDAQ. Because I can have one good trade that doesn't go the distance and make $100, right? Is there anyone in this room that's been with me longer than 30 days that thinks that it would be difficult to make $100? Do you think if your only goal was to make $100 a day, is there anyone in here that doesn't think they could do that? Did you ever think that that's $25,000 a year? Since nobody's posting pictures, we're going to have a mental lesson here, guys. Congratulations, Jen. Congratulations. But guys, I want you to think about this. What if instead of trying to win all the money, you said, you know what? I'm going to make $100 a day. Just for a couple weeks, right? I'm going to make $100 a day to prove to myself that I can win every day. Is there anyone in this room that doesn't think they could do that? And then what happens when that $100 a day turns into $200 a day? Right? Now it's 50 grand. And then what if instead of trying to make $300 a day on that one contract, you turn that $200 a day into twice the contracts? And then on that same $200 a day, you start doing it on 8 contracts, right? And that's kind of what day trading is, guys. It's not making all of it. It's making the easiest money, the best money. But more than anything, it's making it consistently. It's being able to get in and out of the market, having an awareness, taking the trades that make sense, and managing them and getting paid. And I'm going to show you this picture. So who's in prop firms? How many prop firm traders do I have in here today? A lot of you on Apex, something like that? I did this on purpose today, guys. And some of you are like, you didn't do that on purpose. Guys, I did it on simulator. So I took my long. I took my rules-based long in the NASDAQ. Nice job, Andy. And I got paid at my predetermined. So at this point right here, I'm $300 in the bank. One trade, $300 in the bank in a matter of seconds. And I'm out, right? And I'm out, and the market starts to pull back. And I know that a mid-band inside of triggers is a potential entry. So I kept my stop back here. And guys, on any other day, this is my exit right here on the NASDAQ. These pink 1-to-1s are where I take my second profits and I wait for the next goal. And I was typing with my brother. And I said, you know what? I'm going to do what everybody else in the market does. I'm going to do what the people in my classroom do. I'm going to go break even on that third one and just stop reading indicators. And the difference is I made $300 on this trade when I got out break even, way here. When I could have made $550. But if you're a prop firm trader, guys, and you have a trailing drawdown, this $200 that it came back to your break even is now against you. You put your profits up, but that's $200 off of your trailing drawdown. You didn't lose $200, but that's $200 off of your trailing drawdown. You guys have a methodology that is so stinking precise that you know where the market's going to go more often than not. You know what the advantages are. You know how to handle it. If you're in a prop firm, getting paid is one of the most important things that you can do. Getting paid. Or if you're gonna hope that this breaks, then you have to use tight stops. You have to eliminate giving it back. That's how you beat prop firms. Have a plan. Hey, Dave88, man, I haven't seen you in a while. It's good to see you. Best trades are 13-2, 8 range, small triggers in the trade direction, 5-1 trade direction. Everything says up, clear path, and you get out of trouble. Perfect. I love it when you guys come back and drop in the room. Actually, you know what I love more than that, Dave? Is when you have a plan in place that you don't feel compelled to have to be in the room to follow it anymore. Beautiful trading. You got stopped out on the first long attempt. Happens, divergence. You get back in and you're able to capitalize again. Nicely done, man. Nicely done. So guys, this is my how to kill a prop firm picture. you gotta know, first you gotta know the rules, right? What are the rules in your prop firm? Can you trade into news, right? Can you have $1,000 stops? Can you go short and long at the same time? There's a lot of things in prop firms that you can't do. Make sure that you know the rules. And if you have a trailing drawdown, if you have the advantage of Nexgen, get paid at your areas. If you have the advantage of Nexgen, get paid. This is beautiful, isn't it? Everything says up, $300 trade. $75,000 a year on one trade. All right, Pete. Pete got tired of waiting because there wasn't an entry. Everything is up, 50-50. So Pete, I have a rule, and it's not a next-gen rule at all. If I have weakened triggers and I don't have a clear path, you don't have a clear path, brother. Your large triggers are split. Your small triggers are returning inside of the large. Your smalls are inside of the large. Do you see how you're losing momentum and the path isn't clear? This is strong triggers. That's the first sign of weakness when one line comes in. And if they're inside the large over here, that's also a sign of weakness. So it's okay to say, and let me do this. I'm gonna turn everybody's charts into lessons. And Pete, let me stress, I know you have a plan. I'm not worried about you. But your charts are great because you always trade with advantages. So even when there's a little unorthodox on the entry, I still feel like maybe I have something to offer. When this is weak and this is weak, it's okay to expect a little deeper pullback, right? When it looks like this and there's nothing in the way, that's when I'm in at the very top. That's when I'm taking that closest to price entry because I don't expect the small crowd to get a lot done. But when these are weak and I'm at a decision-making point, I'm a huge fan. This could have reversed just as easily as it went up. I love the reversal bar. I love the confirmation bar. I love the idea that I don't have to be in at the top. This would be an awesome momentum trade, right? If it was odds favorable momentum, if it was this fib right here, Pete, with this look, I'm in there all day long. But because it's not as strong, I'm just going to sit on my hands for a second and see what that pullback does, right? And if I get a reversal bar in the direction of it, get in on the reversal bar. You still have room. But I think that confirmation is such a key concept when it's not perfect. When it's not perfect, confirmation goes a long way, guys. I love that he flexed on the P&L because Pete's put an awful lot of work into this. Pete's put a lot of work into his plan. And he knows what he's getting into. He's at that second age, like where it's just, he doesn't think about it. It just happens. It just is or it isn't, right? When you know your rules so well that you don't have to talk yourself through them, guys, that's when you're there. When you speak English but you dream in Spanish, that's when you're comfortable with Spanish, right? When you stop dreaming about day trading, that's when your brain's starting to be comfortable with it. So, nice job, Pete. Man, I'd go through withdrawals through. I spent the weekend in Austin. Guys, I'll tell you what. If you live in Dallas and you spend one weekend in Austin, it reminds you why you're going to move back to Austin. I need scenery. I like lakes and rivers and trails. So, Ron, I'm a little jealous. Oh, awesome, Steve. I like that. There's always something to learn, isn't there? There's always something to learn, guys. I learn every day. Every day I learn. Every day I get a little smarter. Every day I see a different pattern. Every day I find a way to manage a little more effectively. Every day has got to be a step forward, guys. And the cool thing is, and Pete, nothing but respect for your trading, right? Where you're at today isn't even close to where you're going to be this time next year. And it's probably so far away from where you were last year. And I say that because I think people don't celebrate victories enough. I don't think people celebrate, what to do. Gary, if your goals are met, get the hell out. You're done. Go live life. The squirrel chewed through your pressurized gas line? Uh-oh. Squirrels are nasty little things. Gotta put in the work. Amen. Amen. I could go buy the most expensive golf clubs ever. I'm still going to suck at golf until I learn how to swing them. What do you guys want to talk about? Amen, Yoda. Squirrel terrorists. I had a friend. He had a big camper. He was a roadie for a lot of popular bands. And they were doing a festival. It was like a 3-day festival. And squirrels got under his hood at the festival and absolutely just destroyed everything in his camper. It was like $5,000 to fix it. All right, Clara, odds favorable, potential to break. How many ticks below resistance should you put your target? So, Clara, if I'm in a trade, and this is just me, and I will, Pete, I'm two to three ticks away from a fib. And I do that, and let me show you why. And I posted this picture earlier today too. When you open up your software, ladies and gentlemen, it runs thousands of calculations. I mean thousands of calculations. And it's measuring same thing, Steve. It is measuring every swing in the market, every up, every down, everything. Ron, I'll tell you a funny story about squirrel hunting next class, and my grandfather-in-law, who's very country. And it involves hunting, shooting, skinning, and cooking all on the same day. So Clara, when you open up your software, it measures every swing in the market, every up, every down, and it does it not just like in the moment, but it does it 10 days back, and it creates synthetic time frames and higher time frames and lower time frames, and it projects forward and it goes backwards. And it's 90 pounds of genius that I didn't realize my brother had in him. And what happens is it's from all of these calculations. This is what all the fib retracements and everything look like before the algorithm comes in, before it separates them, before it turns them into these areas of support and resistance. So this line is the accumulation of 10,000 calculations, which means that there were lines all the way down here and all the way up here, and it creates this concentration. So when I am getting out of a trade, when I'm trying to get to these areas, I'm very comfortable getting paid 2 to 3 ticks before the area gets hit, because I would rather get paid and get out and wait for the next entry, rather than it turns out that somebody's got a whole bunch of money 3 ticks below it. Does that make sense? Awesome. I don't know if it's going nuts, Pete. It's going up. We are officially in a strong trending market. You guys notice that the whole upswing started from termination conditions at the bottom? Pretty cool, right? You guys knew about those. You had rules for those. And it's still going. I love it. All right, so not on anything other than NASDAQ. No, I don't. It doesn't mean that you can't, right? It doesn't mean that you can't. It just means that I don't. I also don't eat apple pie. So, you know, whatever. Doesn't mean you shouldn't. A lot of people love it. I can't stand it. Ugh. Hate baked fruit. So what's right for me doesn't have to be right for you. Let's read the whole thing though, right? It's a strong trending market. The path is clear. It hit these yellow 1-to-1s and there's no areas inside. Would you be sad about getting paid at 91 even if it went to 95? I wouldn't. I'd take that all day long. All day long. Morgan, I don't do baked fruit. I just don't. I don't like it. There's something about the baking process that changes it, and I can't stand it. All right. Pete asked about a full bar away. So we're going to talk about a full bar away. NASDAQ traders, this is for you. If you're not a NASDAQ trader, go eat a popsicle. Go toast a waffle or something. This is a NASDAQ thing. Block your eyes, cover your ears. This is a NASDAQ thing. I'm going to say it one more time. This is a NASDAQ thing. This is a thing on the NASDAQ. As far as the NASDAQ goes, that's what this thing pertains to, guys. So on the NASDAQ, did I mention that? On the NASDAQ, the large chart rules don't change. The large chart rules don't change. The large chart rules have to be met. The large chart rules has got to have odds favorable momentum. The large chart has got to have that clear path of that 50-50. Your large chart on the NASDAQ, ladies and gentlemen, is a 34.5. It's a 13.2 on any other market. It's a 34.5 on the NASDAQ. Why? Because the NASDAQ is insane. And it's fast, and the average trader can't trade it because it's too fast. So when I'm trading the NASDAQ, my 13.2, which is the large chart anywhere else, is my entry chart. So much so that special workspaces were built to make your 13.2 look like a 5.1. So here's my rules. Two things I watch on NASDAQ entries. When I get to my area, where are my small triggers? If my small triggers are above the reversal bar on a 13.2, I'll enter at the area because it's more than a full bar away. I don't know which full bar you were talking about. Pete, were you talking about the gap theory? I just assumed for entries. I made an assumption. That's okay. This is for NASDAQ people. The reversal bar markers is the same thing. I assumed. So when price reaches the area, guys, when price reaches the area, where are my small triggers on that 13.2 entry chart? If they're above the reversal bar marker, meaning that I have a full bar to get back and test those triggers, I enter at the area because my risk is virtually nothing. If those small triggers are below the reversal bar marker, I sit on my hands and I wait for a close on the correct side of those triggers, because I do it because the 13.2 on the NASDAQ is an entry chart. And whoops, scroll back. Which means that this is my look on an entry chart, right? And nobody's going long against those triggers. Nobody's fighting these small triggers on a large chart on crude oil on the S&P, but on the NASDAQ, this is your entry chart. So it kind of carries over. So I want you to see. So this one says smalls win again. This is only NASDAQ, Jen. So when I get to the areas, look how the small triggers behave as resistance. Isn't that crazy? The large chart says up, the large chart says clear path. The small triggers say don't do it, Pete, you're going to get run over. Nope, not the same. Not the same. We'll get there. I promise. On the 13.2, the smalls act as resistance. Comes up, bing, bang, boom, down it goes. So this is 13.2, guys. One more time. I'm going to show both of them. Here they both showed up on the chart. When I get to the area, if my smalls are closer than a full bar away, I sit on my hands and wait. Look how they act as resistance. I have to wait for the close on the correct side. If I get to the area and the small triggers are above the reversal bar marker, there's room to get a full bar back, then I get in at the area. Just for the 13.2, Morgan. That's it. So some of you are using a 10.1. Or a 10.2, excuse me, right? So if you're using 10.2, here's my entry thoughts. On a 10.2, it's smaller, it's faster. If I don't have divergence, I'm in at the area on a 10.2. If my rules are met, I don't have divergence, I'm in at the area. It's that simple. If I have divergence, I'll wait for a reversal bar. I won't guess. I won't try to time it. I won't wish. I won't want. I won't hope. If I have divergence off the high or the low coming into my trade, I will wait for a reversal bar. And if I don't get it, I won't take the trade. And those are very rigid rules for me trading the NASDAQ. Those are extremely rigid rules for me trading the NASDAQ. Because on the NASDAQ, guys, everybody's good at their large chart reads. And the problem with the NASDAQ, guys, well, the problem with the average trader going to the NASDAQ is on crude oil, you can get away with some maybe stuff, right? There's not that crazy volatility. On crude oil, you can get away with being close but not quite sometimes. I don't even know where that was. That was 945, right? On the NASDAQ will slaughter you and slip you and take you out of contention. And NASDAQ is just a more aggressive market. It's a more volatile market. But fortunately, NASDAQ's only $5 a tick. So you can have the same monetary risk and you've got a little extra wiggle room. But there's some things that you have to know on the NASDAQ. And guys, if you don't know your rules, and if you can't follow your rules at the drop of a hat, the NASDAQ probably moves too quickly for you to be able to capitalize. That was a 50-50 with two divergences, and look how it blew right through. Actually, that was a clear path with two divergences. Might have had to take that one twice. I just did, Steve. I just literally did that. That's okay. The difference is, on the 10-2, Steve, if I have divergence on the high or divergence on the low, I insist on a reversal bar at the area. At the area. That's my 10-2 entry. That's the only thing I have different on the 10-2. If there's no divergence, might as well be crude oil. I'll get in at the area. If there's divergence, I wait for a reversal bar. That's it on the 10-2. You good with that? That's pretty easy, right? That's not a lot of options. However, on the NASDAQ with the 13-2, if I reach that area and my small triggers are below the reversal bar marker, if the small triggers are less than a full bar away, Steve Diego, my rules say wait for a close on the correct side of the small triggers. Don't fight that small trigger immediate strength, because they'll act as resistance. They'll act as support. They do the same thing here. They act as support. Wait for a close on the correct side. If I reach my area and my small triggers are above the reversal bar marker, if they're more than a full bar away, I'll enter at the area. So this is your 13-2 options. Does that make sense? And I'm going to tell you guys right now, your reaction time has to be kick-ass, because this happens fast, gauging where they are. It really does. It happens fast. And then Hamid, on the 10-2, if divergence prints, for me, the only way I'll enter is with a reversal bar. I don't care where the triggers are. If divergence prints on a 10-2, my plan, I don't even know that, I won't even call it a Nexgen plan. My personal plan that I'm sharing with you guys in the room says wait for a reversal bar. That's it. And if there's no divergence, Hamid, I'm in at the area if the rules are met. Steve Diego, your trade was 3 seconds today. It's like being 15. So Steve, on a 10-2, my rules say I'm not in until 35.75 on the reversal bar, which means that my $100 probably didn't get hit. But it also means I didn't get absolutely smoked. So this is where you have to decide, right? This is where you have to decide. Jen, I don't know what you're laughing at. It worked this time outside of my rules. But my rules are based on what works more than it doesn't. And one thing that I've accepted, and man, it's hard to accept this, guys. One thing that I've accepted is that my read, right? My chart reading is going to tell me this market's likely to go up. My chart reading is going to tell me this market's likely to go down. My chart reading is going to tell me, hey, this gap back to the large triggers is likely to close, right? Your chart reads are going to tell you a million things. A million things. But your rules take that chart read and give you a pattern that has been proven to win more than it loses. And that's the difference, guys. We work on chart reading so that we can build strong rules. We work on chart reading so we can find patterns that repeat themselves over and over. We work on our chart reading so that we can take advantage of these things, and eventually your rules change, right? Eventually your rules change. So Jen, if you exited at those pink 1-to-1s, you just got a second divergence 2 ticks below. Neither of them's wrong. Clara, 2 ticks below, right? That's enough for me. Or some of you say, you know what? This is a strong trending market. I'm going to keep buying the mid-band until it doesn't work. And I'll give it, 5 ticks. because it's a strong trending market, I'll just keep buying the mid-band until it doesn't work. And eventually it's going to not work, guys. Eventually this mid-band isn't going to hold. But I'm going to be aggressive. All right, it started going up. All my areas are beyond the correction point. It can either hold and get me because it's a strong trending market, or I'll give it 20 bucks. Does that make sense, everybody? That's a strong trending market. This market's been screaming up, smashing areas. It's still strong trending. Everything says up. The path is clear. I'm going to buy that stupid mid-band until it quits working. That's strong trending market. That's how you trade a strong trending market. Isn't that cool? Mark just broke the rules. No, Mark just opened up another door for you. Oh, it sat right on my target and didn't do it. And the entry was the key point. There we go, guys. I'm up 100 bucks. Break even +1, strong trending market. And then Clara, for you, I've got my target a tick below the fib. This is not a high probability trend trade. This is trading a strong market. Let me show you a cool pattern too. On my 5-1, when I get a pivot stop out up here and this chart says let's try a long, it usually creates a pivot stop out here. And if that pivot stop out coincides with an area that might create a bounce, it helps me pick an entry a little bit. When I have a strong trending market, 30 bars without a reversal bar, 3 Fibonacci areas smashed, and I have that clear path, guys, I will buy this mid-band until it quits working. And since 3 divergences will take me out, Pete, remember this one? My stop is 2 ticks below the reversal bar marker. So it's either going to stop me out. Maybe I say, I'll get paid right there. Maybe I say, who knows? Maybe it's going to go to the next one. I'll let a reversal bar at the area. There's a million ways to trade, guys. Or I could just say, that's enough. I close out right now. Right? And I make a little bit of money and then I get out. But I have to have reasons. I don't just jump in and just jump out. So if I were going to sell this one to my brother, if my brother said to me, Mark, why the hell would you go long from areas not inside of favorable large triggers? Let's annotate a chart. You think? This look, that dashed top line. I'm defining my large chart. Whoa, that's itty bitty. What happened there? Why is the font so small? Here we go. Oh my gosh, delete this. Small's riding large. 30 plus bars. 3 plus broken areas and no reversal bars. On large chart. This is a strong trending market. So that's the first thing that I would do. I would actually go back and I don't know what's going on with this font. I don't know where this came from, but that's ugly. So let's turn it into something better. That's too fancy. There it is. So this would be the first thing I do. Why am I even looking for this trade? Well, because my smalls are riding the large and giving me that dashed look. And this happens in a strong trending market, but that alone isn't a reason. I need 30 plus bars, 3 broken areas, so everything is up. And then I also say, I have a clear path. Hey Morgan, have a good one, man. You smashed through goals today? That's what I'm talking about. And then I have to put over here my rules for a strong trending market say to buy the midband until it stops working, as long as I have a clear path. And then I would take this trade, right, and I would drop it in the room. Jen, if you took this trade and you annotated this chart just like that, and you dropped it in the room, what you're saying is, hey, Mark, this is what I saw. This was my read. And because of this read, my rules, not my gut, my hopes, my wishes, I don't get a tingly feeling. My rules say, buy the midband until it stops working. And guys, strong trends end. That one made it right to the divergence high before it made any move, right? So what happens if it keeps trending and breaks 96? Do we try it again off the midband until it quits working? Because who knows, they may go up to 150. I don't know. There's wars everywhere. People love to manipulate the market during trying times. Does that make sense, everybody? This may not be your trade yet. Like, this might not be what makes you comfortable yet, guys. And if it doesn't, what you can do is you can go, hey, you know what? I'm going to steal this picture from the room. And I'm going to go try and find 20 examples where I could have bought the midband in a strong trending market. So that means that I have to go back to my large chart, right? Let's go see if we can find it again, just for grins. For poops and giggles. I'm looking for a good example. There's a strong trending market with a clear path. You took that pick? I like it, Jonathan. But do you see how I didn't just hope that the market went up? I knew exactly what I was looking for. So there's the same look going up. Strong trending, everything up, triggers cleared. I don't know if it made it to a midband or not. We're going to scroll back and find out. Is that it? That's not it. Missed it by a couple ticks. But the point that I'm getting at with this, the point that I'm trying to make, guys, is that there's a million ways to make money in the market. And you don't have to make all the money in one shot, but you have to know what you're doing. Not like, oh, you have to be super proficient. Have rules, and don't feel like you have to catch every trade. Catch the good ones at first, right? Catch the easy ones at first. Catch the ones that have the highest chance of success. And then you'll find more opportunities. You definitely will. But if you walk into this room and you're like, I want all the money, right? I want to do what Pete does because Pete makes a lot of money. Well, do what Pete does. Start with the years of study. Start with the work. He is, Steve. What time Friday did you send it? Because he may have been asleep. The easiest way to do it, though, is, so tech support, this is it right here. I don't know if he's doing tech support via email anymore. I don't know. I apologize for him not getting back to you. But if nobody responds, email's tough, guys. Email is, there's literally the link, drop a ticket in, and he goes in order and he works these all day long. That's the fastest way to get tech support. I'm sorry you didn't get a response. Is there anything I can do for you? Or did you get it cleared up? But always the tech support link. Right on. I know you are. But we got to be a little new school. Trust me, it kills me. We got to be a little bit new school just because we have one tech guy and thousands of clients. And if we keep them all in one spot, it becomes pretty easy. Yeah, I am too, I think. When I first learned the software the first time, you had to read MacDBBs. You didn't get that automatic divergence stuff. So, guys, build a plan that suits your needs based on your ability to read the indicators. Revolve around advantages. Write out on a piece of paper your plan, why you'll do what you'll do. And trading doesn't have to be stressful. Trading doesn't have to be scary. Trading doesn't have to be, I hope, I want, oh man. Trading can just be, hey, my rules are met. Who gives a shit what happens next? These rules win more than they lose. And I know that sounds super calm, right? But it's true. That's how you do it. And once you get to that point, guys, trading gets easier and easier, and confidence gets higher and higher, and opportunity grows tenfold. So that's it for me, guys. Great class today. A lot of great participation. Really appreciate when you guys throw stuff in the room, give me an opportunity to talk about advantages. You're welcome. I'm here every day, guys, and I'm here to give feedback. So the more you participate, the quicker you're going to get to where you want to be. I hope it feels like nothing's off limits. I hope it feels like there are no stupid questions. I want to see everything you're doing, guys, and I want to turn them into advantages, and I want to turn them into a trading plan, and I want to give you feedback to give you the highest chance of success. And then I want you to fire me because you don't need me anymore. I want you to pop in like Dave888 did and go, hey, Mark, you know what? I don't need you anymore, but I just want to say hey because, you know, we're buds. It's been a while.